All right, there we go. Everything is looking good. Should be live any second now. In the meantime, we'll go ahead and get this stream started. It is Friday, 11 a.m. Eastern Standard Time on 6/24/2022. Crypto Trend Trader with our weekly market wrap up. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. What's going on, Cool Sheets? Good to see you, my man. What's up to you as well? Is Bitcoin dead? I mean, I wouldn't say it's dead, but I would say that it has been laid down to rest for, the next 4-year cycle. Of course, as predicted, as expected, as every other 4-year cycle. So I would just say, honestly, Bitcoin is just more predictable than it's ever been, just doing what it always does. Now, the only big thing, we are seeing some changes now that we've never seen before, such as violating the previous 4-year cycle high, which was 20,000. That is definitely a big deal. But other than that, I would say we're right on target for what you would expect. The biggest change, obviously, being Bitcoin has only ever existed in a, forever loosening environment, and now we're going into a tightening environment like we have never seen before in the life of crypto. So, in essentially, look at crypto as a liquidity sponge, something that's just put out there that just sucks up any liquidity that comes near it. So if there is less liquidity, obviously we're going to end up with a dry, crusty sponge. And, that basically sums up crypto and Bitcoin. I mean, I've literally been saying for months that as people started to realize that this 4-year cycle was topping out, that I expected a lot of these projects to start to cave in, start to implode, go to zero. And look how many projects we've seen literally go to zero in the last couple months. Look how many of the major exchanges valued at, billions of dollars all of a sudden had to stop withdrawals or temporarily halt withdrawals. Look at, Sam Bankman-Fried had to provide a quarter of $1 billion in liquidity to something like, was it BlockFi? A bunch of these like staking companies essentially have imploded. And this is exactly what I talked about. People ask me, why don't I stake my crypto? And I told them because if I'm getting 10% or 20% yields, there's some serious risk involved that's not being fully disclosed. And of course, that's exactly what happened when all of these cryptos projects imploded. So in my opinion, I mean, we're just doing the same thing we always do. Yeah, of course, man. Of course. Everybody was talking about Duquan and, or however you say it, and basically everything that was taking place. And, I straight up called it. Well, basically it was going up parabolically, and everybody was talking about this new crypto and how he was going to buy billions of dollars, and him and Michael Saylor are going to, both be buying massive amounts of crypto. And there was, there wasn't enough sellers and miners weren't selling, and price was just going to go to $1 million. And, I literally called it perfectly. I said, you know what? It sounds like a scam, and I bet it implodes. And I didn't even know anything about it. When you tell somebody about something, it's too good to be true. It probably is. And that was perfect proof of it. So if you lost a bunch of money in one of these scam coins that imploded, honestly, don't look at it as a loss. Look at it as a lesson. So it's a lesson as long as you learn from it. So maybe you lost a bunch of your money, maybe you lost a bunch of your wealth, maybe you're completely screwed now, but you learned a valuable lesson, in my opinion. So, and if you didn't, by all means, somebody's going to come along and scam you on the next crazy, ridiculous project, because you're just going to believe anything you hear. Obviously not you specifically, but now look at what's taking place. We have legal action coming. That was my next prediction, was a bunch of regulatory and legal action. Exactly why I said I didn't want anything to do with stable coins or privacy coins, because that would be the first thing. If I was a government agency and I was looking for some low-hanging fruit, and I was looking to make an example out of a bunch of people in a space, whether they intentionally or did not intentionally do something wrong, you go for the low-hanging fruit. Projects that have essentially scammed or, toted the line, the gray area of scamming or illegal activity, and you go in there, you make an example out of them, you pick that low-hanging fruit, put a couple, 100 million or $1 billion in the, in the pot, and all of a sudden you have, they look at that as basically income. So for them, it's like, oh, if we can grab up a quick little, $250 million fine or $1 billion fine or put somebody behind bars, people will think twice about this stuff. And, that's exactly what we're seeing with South Korea and Do Kwon. And next thing you know, it's going to be, Binance, and probably Coinbase will make its way on the list eventually. I'm sure we're going to see more stable coins blow up. Maybe Tether takes the big fall. I mean, in the end, Tether, in many ways, started a lot of this with that initial depegging. So what's going on, J Huff? Good to see you. So anyway, let's jump right in and get rolling. Lots to talk about today. We could see some potential strength going into today's close, as we're already seeing that. If we close this week strong, that obviously looks good for traditional markets. And then obviously a couple days, I want to see crypto close stronger on like the weekly chart. We're obviously seeing some price action right now. I would say short-term correlation between Bitcoin and altcoins is finally going in the opposite direction, slightly, as we're seeing basically Bitcoin is underperforming right now over the last couple of days, and a lot of these trash bag altcoins are, shooting up pretty aggressively. I mean, we saw a nice move out of Matic over the last like week or whatever, had a beautiful trade there. We saw some pops in some of the other trash bag altcoins as well. We see Ethereum has broken up over a key level. It's not like going parabolic or anything, but at least it's trying to break out. What does this all mean? I would say it means that people didn't learn their lesson. So when people ask me, hey, is the bottom in? I would say absolutely not. Because if people are still running to trash coins every time we have a sell-off, I would say, and not to call specific coins trash, but I don't care. For every one good crypto, there's 1,000 bad ones. So if there's 20,000 cryptos right now, there's probably 20 good ones, and there's probably, 19,980 bad ones. So as long as every time we sell off, people try to run to these trash bag projects or coins or whatever you want to call them, I would say that the market bottom is not in, because we need capitulation. We need these things to melt down, and nobody steps in to save them because nobody believes in them anymore. That's what a bear market looks like. That's what a bottom looks like. That's what capitulation looks like. That's not what we're seeing. We're seeing the opposite. People are still running to the trash. Same with the stock market. People are still running to these trash bag companies. I mean, Revlon declared bankruptcy, and these ridiculous retail short squeeze traders, whatever, saw what they thought was a short squeeze, but in all actuality, what was it really? Well, if you're short on a company and then it basically goes to zero, it declares bankruptcy, the first thing you do is you close your shorts, because that's it. You won. It went to zero. It might not have literally went to zero, but I mean, when something goes down 90% of the way or 99% of the way, and they finally give up and declare bankruptcy, you won. It's over. So you close out your shorts. And then what happens? Well, you start to see a rally. But really, is it a rally? No, it's just the shorts closing. If you're short on a stock, you have to rebuy that stock to go long, and then you return it to whoever you borrowed it from. So if it was $100, it went down to $4, and then everybody, they come out and declare bankruptcy, you close your short at $4, you made $96 on each, stock that you borrowed, basically. And then it starts to look like a rally, and then it goes from 4 to 8, and then all the, unintelligent or brain dead, quote unquote, investors, speculators, whatever you want to call them, cucks, whatever it is, they jump right in, they start buying it up thinking, oh, this is it, big short squeeze coming, and then they end up trapped in a position with probably an insider dumping on them. And that's exactly what I expect to happen with the situation. Now, we had some anomalies over the pandemic because there was a ridiculous amount of liquidity, and we saw some of these trash bag companies, some of these meme stocks, GameStop, AMC, obviously Revlon now. We saw it with some of the rental car companies, basically where they were worthless companies, and essentially same thing happened, and then they pumped, and then all of a sudden they built up a cult following. But they'll never put in new all-time highs, ever. I mean, the likelihood of something putting in a new all-time high after it goes down, 75 to 90% in the traditional market space is like 1 in probably 100. I mean, if you look back at how many things, the probability of going to zero after a 90% downturn is extremely, extremely high relative to the probability of going back to that high. which is why with pot stocks specifically, and we'll talk about those in today's stream, which is why I really like them. Long term, I believe in the fundamentals. The technicals still look atrocious, but in all reality, most of them go to zero. Now, there's an old school rule in investing, trading, markets in general, which is you don't short something under $10 because the likelihood of somebody stepping in and, M&A taking place and basically like the equivalence of a bailout or whatever is extremely high, especially in something like pot stocks. I think it's very, very likely as it's a new space and, we're bound to see some M&A taking place in a bear market, especially in that space. As sometimes you need to have consolidation for growth. Now, if you have too much of it, it can be unhealthy, like we see in some current markets. But as far as like the pot stocks are concerned, I mean, I look at that as basically an all or nothing play. You either lose everything you put into it, or you gain 100x, etc. So good to see you, Cool Sheet. Good to see you, Jay Hoff. Cool Sheet says, think Emperor Powell reverses by end of year or just crush us? No, of course he's not going to reverse by the end of the year. Why would he reverse? Well, we literally just got started. People are calling for Powell to deploy the parachute and save everything, and we haven't even jumped off the cliff yet. We haven't even jumped out of the plane. We're in the plane, we're getting ready to jump out, and everybody's screaming, "Oh no, Jay Powell's he's gonna deploy the parachute. He's gonna flip. He's gonna flip flop. He's gonna reverse. No way they're gonna tighten. The government can't afford their debt." All of these narratives, and they're all wrong. And anyone with half a brain knows that. They're all wrong. They're not just going to flip. This time is different. We have inflation. Until we see probably 3 months of inflation data come in with declining numbers, there's absolutely, in my opinion, there's a near zero chance that we see a flip from the Federal Reserve unless we see something completely break in the markets, completely seize up, or completely just things start getting wrecked. And you know what? They just did the bank test recently. All the banks passed. Everything's looking great. Markets are rallying. You know what that tells them? Everything's fine. Keep on dumping on their faces. I expect at least a 50 basis point hike, maybe 75 again. We'll see. There's absolutely no way, in my opinion. It is a near zero chance that they flip by the end of the year. Matter of fact, I'm not even sure that we see it taking place in 2023. Because honestly, inflation is the biggest thing. And if we start to see inflation come down, the Fed starts to ease, and then inflation picks back up, they lose credibility. And they're not going to take that chance, in my opinion. What's going on, Craig, man? It's good to see you. Made it live. Yes. Hey, good to see you, brother. Appreciate you. Thank you for showing up. All right, so let's take a look at these markets. So we got TNX on the daily. Basically, closed our last candle below the 821. We have very clearly printed bearish divergence from our previous high right here and our high right here on both of our indicator oscillators. So at this point in time, it does look like we're getting the correction we've been discussing. Now, what we have to pay attention to is this going to be another scenario where you get a bullish reset where we basically go sideways to down, but not that far, and then, eventually just cruise back to the upside? Because the truth is, I don't think yields are done. I think there's a temporary, pullback or retracement before we go much higher on yields. And why is that? Well, on the daily, it sure looks like we're getting tired, but let's look at this weekly. What happened on the weekly? Well, we just started a weekly bull market. So, this is where we entered into the bear market in April of 2019. We're below the 200 exponential and simple. Both have a negative slope. We're below the 8 and 21. They're crossed to the downside, and we go to zero. From that point in time, the 8 and 21 flip green. That's the beginning of this. We see a little pullback here. We get above the 200 exponential and simple. We cross both those slopes to the upside. They're both blue now. The 200 exponential is above the 200 simple. We have literally just started a weekly bull market in the 10-year treasury yield. We're inside the bullish control zone. We were all green histograms. Now we're seeing some red showing up. So we are seeing some easing, which makes perfect sense because we're just chewing through that previous high. A lot of people expect this is the high. We can't get above 3% because that was the last high. Or, people just, that number, that recency bias is stuck in their head. They're like, 3% is ridiculous. It crashes everything because of the debt, because of over leverage. They can't do it, blah, blah, blah. Well, look, we already took out that high. We already closed above it. So the next thing to pay attention to is our next high, and that's up here at like 5%. So if the markets are crashing at 3.1%, and I'm right, which gives us at least, I would say, a 50, probably closer like 66% chance that we're going to retest the previous high. I would look at 5.24 as a target. And what does that really mean? Does that mean the Fed funds rate is going to be at 5.24? No, the Fed funds rate is probably going to be, around 3% roughly by the end of the year, which is what they're predicting, between 3.25. That lines up with about a 5.2 10-year treasury. I mean, right now, what's the Fed funds rate at? It's what, 1.6 roughly. And here we have the 10-year at 3.1. So it's about 1.5% or 150 basis points ahead. So if we get the Fed funds rate up to 3.25, which is what they say, well, that puts the 10-year treasury at about 4.75, assuming it's quote unquote priced in, while our next previous high from 2006 is 5.24. So 4.75 to 5.24. I mean, basically there. So that's what it looks like is going to happen. And then when we turn on our drawing tools, we see, the technical breakout has occurred. We are above this long-term descending resistance line. We have broken out to the upside. We have taken out that previous high right here. And the 618 comes in right around 4%. That's the next stop. The 1.236 fib extension from our previous top in 2018 to the low right here basically is 1.236 fib extension, takes us to 5.25. So everything is leading us straight towards that target, and that's fully what I expect to happen. And when we look at this, it's very clear we have broken out of our descending channel, and this goes back to the last time we had inflation. So this is what this chart looks like while we have inflation. Through the 70s and the 80s, we have massive amount of inflation, and this thing is going parabolic. And then quantitative easing starts, Volcker kills inflation, and then we just go into this complete meltdown, or opposite on the bond market, a complete melt up. So if all of a sudden we have a 40-year trend that's coming to an end, and the last time we had inflation, we saw this go parabolic, why is it that hard to believe for people that we go parabolic and just put in another lower high? So do we get up to, 16 or 20%? No, we're not going to get up there. I don't believe that. But do we see 5%? Do we see 6, 7, 8, 10%? I mean, people are acting like that's got a zero chance of happening, and I would say there's a zero chance of it not happening. I mean, look at what's taking place on this chart. We have literally been in a bear market, confirmed, depending on how you look at it on monthly, since the late 80s, early 90s in yields. And we have broken on the monthly chart above the 200 exponential and simple here. 200 exponential is already flipped bullish. We literally haven't seen that happen in 40 years. That tells us this is starting a bull market. We're in the bullish control zone. The bulls are fully in control. We have all green histograms. We're above the zero line. We have a blue slope line. 8 and 21 are across the upside. I mean, this thing looks like it's ready to go parabolic. So everybody's calling for the end. And in my opinion, it's only just begun. Only just begun. So no, I do not think that the Fed's going to flip-flop by the end of the year. I literally think it's a near zero chance. So Tlt Bond Market, obviously seeing that push back up, still need it to reclaim this previous breakdown level of over like 117. Until that happens, I can't get bullish on this at all. I think that's going to line up with basically, what we see on the 10-year. 10-year basically goes sideways to down, resets the indicator oscillator, and then continues to the upside. Same thing on TLT, just in the opposite direction. Consolidate, move back up, hit resistance, run out of steam, and then sell off. We are literally on step one of quantitative tightening. The Fed, it's great. The Fed is no longer buying mortgage-backed securities and treasuries, but that's only one step. Also, the Fed has only just begun, letting their balance sheet run off, and they have it set up in 3 phases. Each phase, equal 33%, 33%, 33% until they reach their goal. So we're only at phase 1. We're only at that first 33%. So however bad it is now that the Fed's not buying, treasuries or mortgage-backed securities to replace those that mature and roll off their balance sheet, times that by 3, because that's their goal. And that's over a 3-month period. And we're only 1 month in. So no, we haven't even seen the beginning of it. And do I think crashing the markets is going to make the Fed, reverse? No, they literally are telling you. Listen to what Jerome Powell is saying. He is literally saying, we created a bunch of wealth through our quantitative easing over the last 40 years, especially over the last couple of years as it went parabolic. He goes, and now, in order to correct the economy, we need to destroy demand. And what is destroying demand? We need to destroy that wealth. We need to destroy it. And that's what they're doing right now intentionally. And he specifically calls out the stock market, the housing market, and rampant speculation in things like crypto. So no, 100%. People are like, oh yeah, but things are crashing now and you know, they're never going to let it go down and they can't service the debt. And all the things that people are saying can't happen are literally what JP is saying he's intentions are. So if somebody tells me, hey, I'm planning on punching you in the face, and you're like, no, you can't punch me in the face because you'll go to jail for assault and this, that, and the other. And I say, look, I'm getting ready to punch you in the face right now. So you may want to cover your face up because I'm about to punch you right in your face. And you're like, yeah, you'll flip flop by the end of the, conversation. You'll never punch me in the face. And then I start punching you in the face. And then you're like, oh man, I can't believe this. This is crazy. You're punching me in the face right now. Wow. I mean, how could you be surprised? You literally, I'm sitting here telling you, I'm getting ready to punch you in the face. I'm cocking back my arm. I'm grabbing you by your collar and I'm looking you in the eyes and I'm saying, hey, I'm about to punch you in your fucking face. And that's what Jerome Powell is saying right now. He's saying to the markets, I am getting ready to punch you in your fucking face. So do something about it. And they're not. The market is calling his bluff. They're saying, no, he'll never do it. He can't do it because the interest rates. You can't do it because I'll call the cops. You can't do it because you'll break your hand. Or he's punching you in the fucking face regardless. He's already said it. He's doing it. So you can either sit back, get punched in the face, and then say, wow, that's crazy. I can't believe you punched me in the face. Or we can just listen to what he's saying. That's how I look at it anyway. So what's up, Christoph? Good to see you. Hey, a boss. Calma Betty says Bitcoin 10K or lower. Let's go. Uh-oh. He's back, baby. Cool Sheet says another year of Powell pain and Saylor gets liquidated. I mean, you guys know, how long have I been saying about what would happen to Michael Saylor? How long have I been saying what would happen to MicroStrategy? It literally has not put in a new all-time high since the year 2000. The last time MicroStrategy was at its previous all-time high was 2000. It went down 99.9%. It recovered, and it's still down over 70 or 80% from its previous all-time high. A 20-year cycle went by, and MicroStrategy never put in a new all-time high. So expect another 20 years without a new all-time high on MicroStrategy. Expect potentially another, 6 years before a new all-time high on Bitcoin. I would not be surprised at all if we lose a whole cycle, a whole 4-year cycle on Bitcoin without putting in a new all-time high. As a matter of fact, that's my base case scenario. We correct 5 ways, we don't put in a new all-time high for the first time ever in a 4-year cycle, and then people capitulate. That's my base case. Maybe I'll be wrong, but you know what? I was right about Saylor. What did I say? Michael Saylor will be upside down in his Bitcoin position by the end of the year, and then something crazy is going to happen. He's either going to get liquidated, and this was way before anybody else was talking about any of this. I said he's either going to get liquidated, he's going to scam the world, he's going to pretend like he lost the Bitcoin, he's going to get, arrested, or I shouldn't even say arrested, but prosecuted by, the SEC. I mean, everything I've said is literally coming true, fundamentally and technically. So at this point in time, I would say I got a pretty good grasp of this market, and I'm just going to keep doing what I do. So. But no, I mean, no surprises here. We've seen cryptos imploding, going to zero, like I said. We saw Do Kwon was a scam. We saw Michael Saylor is, either brain dead or scam trash. I mean, we've literally seen everything coming true. So, I'm not going to change my base case because people think the Fed's going to pivot. As a matter of fact, it just further enforces my beliefs. Because as long as people call Powell's bluff, which is basically what the markets are doing right now by not selling off more heavily or not believing the rate hikes are coming, the more people call his bluff, the more likely he is to just stick it to him. Because if you hold somebody by the collar and say, I'm going to punch you in the face, and they don't even flinch, I think you're more likely to punch them in the face because they don't believe you. And you're like, okay, bitch, here it comes. So the fist is already, we've already punched, our victim in the face multiple times. We punched the market in the face, and the market's still like, no, you can't keep punching me in the face. And you're like, bitch, you said I couldn't punch you in the face to begin with, and I've been punching you in the face. So what makes you think I won't sit here and keep doing it? And that's what I see. That's what I see the Fed doing. Being like, okay, you want to call our bluff? Here comes the pain, baby. So that being said, let's look at some technical analysis. Appreciate everybody showing up today. Obviously, none of this financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. So here we got the VIX on the daily. Again, we're seeing exactly what I said happen on the VIX. We are basically operating inside of this triangle in an ascending channel. Each time we came down to the bottom of the channel, we got a nice aggressive bounce. The last couple times, we did not make it up to the top of the channel. Instead, we started forming this descending resistance line right here, which gives us basically a symmetrical triangle, a neutral pattern, obviously bullish coming into the pattern, so it has a more likely than not bullish continuation. Every time we have basically seen the hard buy signal come in was near the bottom and the 200 exponential and simple moving average and the bottom of that channel or triangle in this case. So I expect this to come back down, the relief rally to continue, find some kind of support down here, and then again, move back up and then continue just trading inside the range. As the longer we're inside the range, the more likely we are to continue inside that range. And we took a look at this pattern right here, and depending on how you draw it, I mean, realistically, what typically happens with these patterns is they go through 66% to 72%. That's just your statistical average for how long a pattern like this takes to break a triangle. So that puts us somewhere around here. So around August of 2022. So a couple months of just bouncing inside this channel, and then maybe we break down and everything's gravy. Maybe we break up and we see a, cycle top in volatility, which, essentially would line up with a cycle low in stocks. Now, does that have to happen? No. And could this break out and then literally, hang out in this channel up here, in our zone right here, from, this was March of 2020, beginning of March. This was mid-March. And then, that was basically April. So we spent a couple months up here doing this. So if it's a couple months before we break out, and then comes, by August we break out, and then we come up here and a couple months go by, maybe by end of year or early 2023, we see our macro top. Now, alternatively, there's a possibility we get a situation like what took place in 2008 also. Let me just go to the monthly here real quick. Sorry, I meant to say 2000 also. So in 2008, we actually put in like the all-time high. But here in 2000, we barely kind of like touched up in here. In 99, we touched up in here for the 2000 burst. 2002, we touched up in here. But we basically just kind of went sideways on the VIX while the market's completely melted down. So we don't necessarily have to see this thing spike up into the zone. We just know if it gets up here, that's probably going to mark some sort of cycle high. And that's what seems most likely at this point in time. So, all right, so let's keep it rolling through here. So U.S. oil, we saw a massive breakdown of our key support right here. I'm sorry, support broke down. We're coming back up for the retest. And then also, that is a key Fibonacci level. Again, we're retesting that as well. So we came down to the support of the heartline of our channel we were operating in. We retested our key Fibonacci level and the breakdown of the ascending support right here. I expect this to act as resistance. And then, potentially come down to our continuation target. We saw energy come off a lot. We saw copper come off a lot. We saw lumber come off a lot. Oh my gosh, that's crazy. Didn't we say all that was going to happen? Didn't we say the commodity trade and the energy trade were all too crowded now? Didn't we say all this stuff? Of course we did. It's very clear. It's very obvious what's taking place now. All these things have come off their highs, 20, 25, 50%. I mean, lumber is down like 70-something% right now. It's back to pre-pandemic levels. But I thought everything was just always going to cost more into the future forever. Looks like that's a big no because of demand destruction. So in my opinion, we have our finger on the pulse of this market, and we're going to continue to do what we've been doing because it's been working. And now if something gets thrown in the gears, a wrench gets thrown in there or whatever, something changes, by all means, we'll adjust. I'll be happy to be wrong. But in the meantime, it's playing out exactly as we expected. So Dow Jones coming up here and filling that gap as we discussed. We obviously have one more gap slightly higher. Do I think it gets up to the other gap there? We got to wait and see. Obviously, we don't know. But essentially, we have broken down from that 236, and now here we are retesting the 236 and closing that gap. So no surprises right here. Nice strong candle. We are back above the 8. We're retesting the 21. Obviously, we're in the bearish control zone. We busted out of it here. We didn't see any divergence taking place on the Dow Jones, but we are seeing it's a decent little move so far here. Nice little 2% again, off of the lows, off of our target. That was us, round tripping to our 2020 highs. So no surprises here. Once again, continuing to just operate inside this, descending broadening wedge. Still well below 200 exponential and simple bear market. This looks like just a bear market rally to me. We're basically just, going to move up here, put in another lower high, and then continue. I see nothing changing right now. As we come to the end of the week, what is this really? Oh, it's the exact thing that we said. A bounce off the 200 exponential. Coming back up here to close the gap. Does this look like all of a sudden we're just going to be bullish again? Or does this look like we're just retesting the 200 exponential and we're seeing a reaction rally as people like me who are expecting this target just close shorts? That's what it looks like to me. It's exactly what it looks like to me. I see no signs of bottoming on a weekly chart, and definitely not like a macro bottom. As a matter of fact, not to be surprised, because obviously that was our target, but typically traditional markets see much more of a reaction or confluence at a 200 simple over a 200 exponential. So it's actually kind of surprising to see Wall Street respecting the 200 exponential as much as it is. Maybe that's dumb money. I don't know. We're not seeing any volume coming in. If this was a big bottom, why is there no volume? Where's the volume at? There is none. Because who's buying? Retail, aka retards. That being said, SPY, again, closing the gap. So we came up here, we left this gap down here, we're coming up to close it, retesting the 21, back above the 8. First signs of any strength from this market. We do see some slight bullish divergence, as we see on many other assets, obviously telling us there was a scalp probably coming up, and obviously we're seeing that play out now. So far, it's pretty pathetic and underwhelming. I mean, this is the big move that has everybody excited that the bottom's in now. I mean, that's pathetic. Wow, congratulations. We went from, 365 to 386. So that's it then. New all-time highs, right? Right. I mean, it's just crazy hearing people talk and what they expect to happen and the same narrative repeated over and over again. You know what? It's not even being repeated. It's being regurgitated by the brain dead masses. And I'm not just talking about retail. I'm talking about the quote-unquote influencers, on CNBC or on, financial whatever, YouTube or any other social media platform. I mean, it blows my mind how many people could be absolutely wrong about everything that's taking place, stick to their guns, and still have massive, massive followings of, they're basically, they're lemmings being led off the cliff by another lemming. The only difference is the lemming that's leading them off the cliff, has a bullhorn in the form of, basically a loud voice and, a big platform, or maybe they're famous, whatever it is. So SPY on the weekly, again, just bouncing 200 exponential and closing a gap. Big surprise, right? No, of course not. Exactly what we'd expect to happen. So no surprises here. A strong weekly close on these two indexes, the Dow and SPY. Looks good in my opinion. We probably see continuation on Monday. But what is probably going to happen by the end of the week? Well, let's see. I have a feeling that in the next 4 hours and 23 minutes, that there is a definite possibility, probably a likelihood, or above 50% chance that we see weakness coming into the end of the week. This is an initial pump back up. We close the gap. Everybody gets excited. It looks like we're going to close a strong Friday. And then what happens? We just start to give this back and potentially roll back over. Now, it doesn't have to happen. Seems likely, though. I don't see any strength in these markets. And the time is not our friend right now in these markets. Because the longer time that goes by, the closer we get to our next earnings. And realistically, what is going to be the next big catalyst for a downturn in the markets? Earnings revisions. I absolutely promise you the next big downturn will be earnings revisions. We've been talking about this in the private group quite a bit, and I basically wrote a book about what's going to happen once the earnings are revised. Because right now everybody's talking about PE ratios, and they're saying the PE ratio has come down. Now it's undervalued. It's at historically average levels. So now everything is good because it was at high levels and now it's at average levels. So it's good, right? Because prices come down. Therefore, our PE has come down substantially. Here's the problem though. And this was the example I showed in the group is, if our price comes down by 50% or gets cut in half, which is, what we saw in a lot of stocks, some less, some more, obviously if you're in tech, it was probably closer to 80%, especially if you don't make money. If you were in some of the more stable sectors or in something like, the Dow or S&P, a solid like index or something like that, then probably it came down, 25% roughly from the highs, or 20% depending. So what happens when all of a sudden that, if we have 100 over 10, let's say, and we have a 10, 100 is our price, $10 is our earnings. So we divide, 100 by 10 and we get 10. That's our PE ratio. So then if our price comes down by 50%, now we have 50 over 10. So now we have a 5 PE ratio. So it's cut in half and all of a sudden now it's reasonable. Because historically, the PE is whatever, 16 or 11 is cheap or whatever it is. So we start saying, oh, this looks cheap now in comparison to our recency bias when everything has been extremely expensive over the last 40 years during, what was a massive quantitative easing bubble. Well, what happens all of a sudden if the earnings come down? What does that change? So it has the opposite effect, but it's parabolic. So if the 100, stays the same and the price doesn't change, and then the earnings is 10 and the earnings gets cut in half, now all of a sudden you have 100 divided by 5 instead of divided by 10. And now that's 20. So now the PE ratio is 20 as opposed to 10, or if the price comes down and the earnings doesn't come down, as opposed to 5. So what happens if, price and earnings come down by an equal amount? Well, if the 100 drops to 50 and the 10 drops to 5, now we're back to 50 divided by 5, which gives us a 10 PE. So the second that we see earnings adjust, all that's going to do is just skyrocket the PE ratio again, straight back to where we were. So if we come down 50% on price and then earnings takes a while to catch up, it looks like the PE ratio is fair valued. And then all of a sudden the earnings gets revised and it comes down by 50%. And now all of a sudden we're right back where we were before. So everybody that was saying, well, we were just overvalued at, 10 to 1 PE ratio. And then we go to 5 to 1. And it's like, okay, now it's a good deal. And then earnings adjust. And then we go back to 10 to 1 because price is halved and earnings is halved. Now all of a sudden we're right back where we started. So those same people now all of a sudden that's an acceptable PE ratio? Or are they going to step back in and say, well, we're overvalued again, so price has to get cut in half one more time? And then, price gets cut in half from, 100 to 50 and then 50 to 25. And then earnings gets cut from 10 to 5. And now we have 25 over 5. And now we're at 5 PE ratio. And it's like, okay, now we're fair valued again. Well, are we though? Or are we just seeing the lag effect in the earnings adjustments corresponding with the already adjusted, price? Because everything's quote unquote priced in. The market is, efficient. It's looking towards the future. As where earnings, those are projections of the future. Therefore, they're basically just educated guesses. Well, if you still think that earnings aren't going to come down in the broad market over the next couple of years as we go into quantitative tightening and everything taking place in the economy, and the Fed basically saying, we need we overcorrected on the job market and we need to close that gap again. And what does closing the gap mean? Think about what Jay Powell is saying. He's tiptoeing around it. And sometimes at these congressional hearings and stuff, they will get called out slightly, or someone will put him on the spot and say, so wait, are you saying that you want to destroy jobs? Are you saying that you want people to lose their jobs? Are you saying that you want the unemployment rate to go from historically low to more regular? And that's exactly what he's saying. That's exactly what he's saying. So he's literally saying the whole way this process works is if there's a bunch of jobs, it's because there's a bunch of businesses that want to hire people because they're optimistic towards the future. So how do you get those businesses to stop hiring people? You make them less optimistic about the future. And then you have less job openings because people are like, wow, we're not hiring right now. We're putting a hiring freeze. We're seeing that all over right now, hiring freezes. And then we saw tech, who obviously has been overcorrecting or ahead of the pack, is selling off heavily. And now they're starting to say, wait a minute, not only are we not hiring anymore, we're actually firing people. We're laying off. Elon Musk laying off. Did you hear him talking about Tesla? Talking about his new gigafactories? He literally just did an interview and came out and said, these gigafactories right now are literally suffering heavily from supply chain issues and labor issues and everything going on right now. And they are literally just factories that are setting money on fire. Billions of dollars in destruction of money. He said basically all we're doing right now is lighting dollars on fire. Does that sound like an optimistic outlook? Is Elon Musk the type of person who's going to keep it real? Or is Elon Musk the type of person who's going to piss on you and call it rain? I would say he keeps it real almost to a fault, which is what I like about Elon Musk. And I don't like too many billionaires. But I like Elon Musk and what he does because he keeps it real, man. He's not bullshitting. And I think the rest of these companies, the rest of these analysts are delusional or blatantly lying to you. In my opinion, they're literally pissing on everyone and calling it rain. So that being said, let's keep on moving through here. So IXIC, Nasdaq getting a little pushback to the upside, back up here at the 821. We saw some bullish divergence, seeing a bounce. Again, not to be unexpected. This is in a deep retrace. We actually came down to the 200 simple, a little more in line with what I would expect for a potential bottom. Now, if we saw the S&P and the Dow down here hitting the 200 simple, I would be much more optimistic that this was a bottom. I do not think that we bottom off the 200 exponential. Matter of fact, you want to know what the Dow Jones is going to look like in a few weeks? You want to know what the S&P is going to look like in a few weeks? I mean, this is it. Just look at this chart. This tells you exactly what happens. You know, we put in a high, we put in a lower high, we start to sell off. The 821 crossed the downside. This is our weekly Nasdaq chart. Continue to put in lower highs and lower lows. Fail to reclaim the 821 cross. Sell off to 200 exponential. Get a reaction rally. Run into our key moving averages, or what was support acting as resistance. We sell back off. Come back down to the same level. Break through that level. And then here we are at the 200 simple. So, I mean, we're just 1 week, 2 week, 3 week. We're just 4 weeks ahead. This is just 1 month ahead of the S&P chart. This is literally exactly what the S&P or the Dow looks like a week from now, in my opinion. We bounce the 200 exponential perfectly. We push back up. We put in another lower high. We sell back off, retest that area. We break down to the 200 simple. If the whole market was at the 200 simple right now, I would potentially be much more bullish, or at least neutral, that maybe this is the bottom. But to tell you the truth, traditional markets don't bottom on the 200 exponential. They bottom on the 200 simple. And that's why I look at both of them, because, crypto markets better to look at 200 exponential. Traditional markets better to look at 200 simple. I love them both. So that being said, what are we seeing here? Sure, maybe this is the bottom. Sure, maybe. I mean, but also look at the last, this is our 2008 meltdown. And look how many times we've seen blocks of green on here. Here's a little sliver of green right there. That's 2016. Here's a little sliver of green right here. That's 2018. We didn't even get one in the Rona dump right there. And now here we have this, chunky green showing up right here. I mean, that looks to me like a change. Something's different. Where'd all the red go? Why is it starting to turn green? How are the bears in control more so than they've ever been in control, for the last 15 years? That's bullish. That's what bottoms look like. Sure, okay. Have fun picking the bottom. Every time we drop 50%, keep buying, and then you'll run out of money before we get to the bottom. Russell on the daily. Again, we saw that bullish divergence. We're seeing that play out now. We obviously put in a low right here. We put in a lower low here. Here we have a low. Here we have a higher low. Bullish divergence playing out, retesting key levels. And then again, when we switch out to our weekly chart, obviously as we come towards the weekly wrap up, this thing has not only, this didn't even get the initial bounce off the 200 exponential, immediately got rejected. Came to the 200 simple, reject lower prices. Came back up, reject higher prices, and then capitulate through the 200 exponential. And a matter of fact, on the weekly chart right here, we technically confirmed into a bear market on when this 200 simple flipped right here. So on a weekly, the Russell's in a bear market. And look at this trash. I mean, it's already come all the way down, retested our 2020 high. And keep in mind, the Russell is now at its 2018 levels because it didn't even put in a new high in 2020. So this thing was already trash right here. It failed to put in a new high right here. It's definitely trash. And then only the liquidity, the massive amount of fiscal and monetary stimulus was enough to actually pump this trash all the way back up to new all-time highs. This is a dead zombie index right here, full of zombies, okay? And it was dead, and it was going away, and then they pumped some kind of serum into these little zombies to make them start, acting a fool again, running around, yelling brains and biting stuff. But are they still zombies? Yeah, they're just hyperactive zombies. They're just zombies that drank Red Bull, okay? And now the Red Bull's wearing off, and now here we are, back where we were in 2018. And that is not what a healthy chart looks like. I mean, it doesn't look terrible because of this, but why are we 100% round tripping all the stimulus? We've spent $10 trillion, and we see a lot of stuff is back down at, key levels. So what did the 10 trillion do? It bought us time. That's it. It got us high for a little bit. But what now? We're out of crack now, and we're starting to get itchy, and we need another hit off that crack pipe. And Jay Powell is saying, hey, man, we hit the crack pipe, and honestly, I don't think you should be smoking crack. So how about instead we take you to, what do they call them? Recovery or whatever. And you go there and get healed up. And the market's like, yeah, I don't want to heal up. I want to smoke crack. And he's like, yeah, you're not going to smoke any more crack. And now the market is like going into withdrawals. That's how I look at it. The market's a drug addict, and it's not getting its drugs anymore. What's going to happen? Well, it goes into withdrawals, and probably a lot of it dies. Because not everybody survives the, cold turkey. So XLI industrial came all the way back down to our key, 2020 peak right here, getting that dead cat bounce, retesting a breakdown. Does not look, doesn't look particularly bullish to me. No, it's actually the opposite. All these things are in a bear market. Every sector but energy is in a bear market. XLP, consumer staples, seeing a more powerful bounce. Obviously, this is a safety play. Potentially going to come back up here, retest a breakdown back above the 236. This is in a bear market, but looks better than most. Maybe we get up here to like 73 or so. Again, we don't see that same bullish divergence, but we do see a lot more strength out of consumer staples. XLF, financial sector, completely melting down. Again, pre-pandemic lows, descending, broadening wedge lows, seeing one little bit of a bounce, a push back up. But what are we doing? We're just closing gaps. We're just having dead cat bounces off key levels. Is this people buying or is this people closing shorts? I would say it's people closing shorts at support. And the higher this goes, the more shorts pile back in, and then we're able to break through support. XLRE, real estate, so that trade played out perfectly. Beautiful little 20%, easy move to the downside. Again, closing out shorts at the 382, the technical next support. And now here we see the dead cat bounce taking us back up to our pre-pandemic highs. And, depending on how high this gets, maybe back to the 236, I expect people to load shorts back up and continue pushing this down. Very clearly in a bear market. XLV. So we broke down healthcare from that key support. Basically put in a clear topping pattern. We broke back above that resistance. We closed these gaps back out. So what is this? Is this just a spring we broke down and now we're going to shoot back up to the upside? I mean, it's possible. Anything's possible. Do I think that we're going to start putting in new all-time highs now on healthcare? I really don't see it. I think a lot of the reason that we saw the healthcare sector do as well as it did is basically, the new industry that was added, aka, shots, everybody. I mean, that's what it is, right? That's how I look at it. So, does this look better than most things based on this dead cat bounce? Having a little more legs to it? It does. Overall, is this one of the better sectors to be in if we go into a bear market or, recession? It is. It's one of the safety sectors, but doesn't look particularly great to me. Probably if we go to a longer time frame like the weekly, it just looks like a retest of a breakdown. So look, here's our 821. We break down, we come back up, we retest the 8, find resistance there, and then probably continue to sell back off. And again, then what happens after that? Then we break down, we come down to 200 exponential, find support there around the 382, then we bounce back up again, put in another lower high, then we come down again, we touch the 200 simple, and then maybe around 108, I'll believe that there's potential that we're bottoming off the 200 simple on the weekly. Do I think that's going to happen? I really don't. I think this is going to be nasty. I think it's going to be nasty like people don't remember. XLB. And when I say nasty, it doesn't just have to go deep. It doesn't just have to be a massive sell-off. I think we're going to see what I like to refer to as time capitulation. Two types of capitulation. There's price capitulation and time capitulation. And we have seen more so than ever in these last couple of years, more money borrowed than ever before. And when you borrow money, you have to pay it back, whether it's on a credit card, whether it's a loan, whether it's a cash out refi, whether the government gave you some ridiculous, loan to keep you in business or whatever support program, whatever crutch you have. Eventually that crutch breaks down over time as you have to make these payments back. And eventually people capitulate, usually not by choice. They give up. They say, I can't do this anymore. All it does is go down, sideways. It's been years. It's not putting in all-time highs. This is a dead asset class, and I need this capital. And that is what time capitulation looks like. People give up because it's just taking too long. They're just too impatient. And that's what really hurts. Price capitulation sucks, but that's just step one. Time capitulation is really nasty because, we've seen periods in time where we went 11 years without, new all-time high in the stock market. So, are you ready for 11 years without a new all-time high? Maybe you are, but I don't think most people are. And I'm not saying that has to happen, but it's viable. It's happened before. Why not happen again? XLB, materials, pretty pathetic bounce right here. So why do materials look so bad? Well, because we're seeing manufacturing slow. We're seeing, important sectors slow. Confirming into a bear market doesn't look good. Does not look good. XLY, consumer discretionary. So we obviously hit our target perfectly. This one came all the way down to the 0.5 and literally touched tip to the 0.5 and also the pre-pandemic high. So does it make sense that we get a dead cat bounce off this level? Of course it does. Of course it does. Bullish divergence, dead cat bounce, pushing back up to resistance. Fully expect this to continue lower. XLU, utilities, one of the safety sectors. So like we said, we basically broke down from that key ascending support. We reclaimed it, the same thing we did last time. And then, maybe this one actually continues back to the upside. I would say if anything does, it's probably going to be utilities because people need utilities regardless. Again, one of the safety sectors. Don't necessarily think that's going to be the case, but it has a better argument for this being the bottom. Again, I would have rather see it hit the 200 exponential and simple, as that gives people some confidence that the low is in. But this is a pretty aggressive candle. Obviously, not even a bullish engulfing candle because the weekly was so nasty last week. But looks much, much better now than it did just a couple of days ago. No surprise, though, obviously. Again, safety sector. So, all of a sudden, energy is not safe anymore. So people are going to run to what should be safe. And what is that? Real estate, utilities, consumer staples, all these like important sectors that at least pay decent dividends and tend to have shallower drawdowns. XLC communication just completely wrecked all the way down to 618, well below the pre-Rona highs right here. I mean, this thing, talk about a round trip. XLK Tech, again, just continuing to melt down. 382, very, very technical. I mean, these things are trading extremely technically. So if we just trust the technicals, we'll all do extremely well in these markets because whoever's in charge, the market makers, the whales, they're doing the same thing we're doing. So we'll just keep doing what they're doing. XLE Energy, obviously call the top. Don't try to call the top. It's not, my goal is not to call the top. I constantly say, don't call the top. All right. But when I see signs of a top, also, I'll point them out. But just don't get in a bad habit of it. Now, it just so happens I get lucky a lot and it works out perfectly. Don't rely on quote unquote luck or trying to call tops or bottoms. But, when we see signs, there's nothing wrong with saying, hey, this is probably the top. In the last, 2 weeks now, we've had what is this, about 25%? Yeah, about 25% downside right here. And what did I say? Everybody's on one side of the trade, so now it makes sense to flip the trade the other direction. What did I say? We have a 5-wave structure right here. We're now correcting the 5th wave. We hit the 382 in purple right here. What do we really expect to happen? We eventually expect to correct the entire 5-wave structure, which is our little rainbow fibs right here. We're almost at the 236. Obviously expect a bounce, lower high, and then eventually down to the 382, and then maybe we can call that the macro bottom. And in my opinion, this little segment right here that we're looking at, this is basically what Bitcoin is doing, but over that, 12-year period. We have our first 4-year cycle, 2013, 2017, 2021, 2022, and then initially, what do? Well, first we correct the 1, and that's our 2, 786 retrace in blue. Then we then we put in the 3, second leg, and then we correct the 3. That's our 4 right here. And again, in the green now we see the fibs. That's a 236 correction. And then our 5, we come up here, and then initially we correct the 5, which is our purple fib. We come down to 382 or so, push back up, and then we put in a lower high, and then all of a sudden, wait a minute, now we're correcting the entire structure from bottom to top. So I look at this as Bitcoin 0. I look at this as Bitcoin 70K. And then the targets are first the 236, then a lower high, then the 382, which is where we're at right now. We're at the macro 382 correction right now we're at the macro 382. No, we're at this 382 right now. So we're essentially at the purple 382 in Bitcoin. So yeah, this chart looks exactly like Bitcoin does. We're at the purple 382 right now. People are saying that's it. Maybe we go lower to the 0.5. But in all reality, we're now looking at the life cycle 236 retracement. And then all of a sudden people are like, we're just retracing wave 5. Everything's fine. Oh my God. We're not just retracing wave 5. Oh, it's getting disgusting. Oh my God. And then next thing you know, you're at Bitcoin, 1,800 or 6,000 or whatever. So, and obviously we'll look at the actual crypto chart. We don't just have to pretend and look at XLE. XT and transportation. And also it's important to note that when we see energy Oh, there goes that one. We'll never see energy again because I just clicked it close. So when we see energy putting in a spike high or a blow off top, that typically is right before the recession happens. And the last two times we saw that was in 2008 and 2000. Kind of saw one in 2014, but it was more just like a rolling over. Transportation looks like trash, obviously. Transportation, one of the horsemen. Energy, obviously, one of the horsemen. Semiconductors, one of the horsemen. And then obviously 210 yield is the final four horsemen of the apocalypse. And that being said, XSD semiconductor ETF, we got the bounce off of the 382. Barely got any price action to the upside. Do we come back up here to 236, put in a right shoulder, or do we just melt down? And this is more just like, it doesn't have to be a perfect pattern. We just put the patterns in here to reflect the psychology. We put in a high, we come down, we find support. We put in a new high, we come down, we start to lose key support levels or moving averages. Then we come down, retest that same level again. Then we get a bounce off that. We put in a lower high, and then that actually tops out. We run into resistance, we confirm into a bear market, and then we melt down. And obviously that's exactly what I expect to happen. 210 spread is doing something beautifully that we'd like to see. It is starting to roll over. Okay, so everybody's talking about the curve inversion, the 210 flip, where the 2 is paying more than the 10. And we've said that's fine. That's what we initially look for, is a 210 yield curve inversion. Okay, we don't really care about the inversion. All the inversion is saying is, hey, we inverted, which means probably we don't keep going on like this. But we're seeing this start to roll over right now. And if we're going to see this thing do the same thing it's done every other time, instead of my base case, which is a breakout, and move to the upside and a shift from this 40-year downtrend, if I'm right, which I don't have to be, this breaks out and continues to the upside and they go parabolic. If I'm wrong, though, we just roll over and then we go into recession. And every time we ran into recession was these big white lines right here. Every time when we went into recession, we basically roll over, and that's the mark of the recession. So what do we see happen? We see the master flips red and pink, and that's the recessions right afterwards. So every time we see this pink flip right here, recession, pink flips right here, recession shortly afterwards. So if this starts to roll over and come back down and I'm wrong, which that's fine, I'll be wrong. I'm not always going to be right. Let's be real. If this rolls over and I'm wrong, what do we expect to happen? Well, it flips red and then right afterwards, recession. So definitely a possibility. I am wrong. And, either way, we know exactly how to play it. So who cares if we're right? Who cares if we're wrong if we make money either way? I don't give a shit. I'm not in this game to make, correct calls and be right and look like, oh, this guy's amazing. He's got a crystal ball. I don't give a shit. You know what I care about? Money. Okay? And that's all any of us should care about. Wealth creation. I don't do technical analysis to be right. I do it to make money. So DXY is next. Again, seeing similarities. This thing's holding up a little bit stronger than the TNX is. We see the hard sell signal. We left the bullish control zone. We printed bearish divergence. No surprise. But is this just going to look like another bullish reset before continuation? I mean, I wouldn't put it past the market to just do the same thing again and continue higher. Let's look at our weekly. Does this look like a bull market or does this look like a bear market? We're above the 200 exponential. We're above the 200 simple. The 8 and 21 are crossed to the upside. It's all green. We're literally going fucking parabolic. This is what a parabolic trend looks like. And why do I say that? Well, look at the slope between this low right here and this low right here. And then look at the slope between this low right here and this low right here. The velocity of the trend is increasing. And the next thing that happens is we go straight up. So get ready for the DXY short squeeze of a lifetime that completely wrecks the entire world. You want to know what a black swan event is that crashes the global markets and completely changes the construction of our, fucked up system as we know it? How about a DXY squeeze up to like 120? I could see that. I could definitely see that. Weekly chart is extremely bullish. We're seeing a little bit of tiring as we see a hard sell and a little bit of red coming in here. But obviously, we are very, very bullish. We took out the 2016 high. We took out the 2020 high. And the next high we have to threaten, the same as we were talking about with the Treasury yields, TNX, or, the 210 spread. The next thing we threaten is that 120 level because that was our previous high from 2001. That's what this looks like to me. And then if we go out to the monthly on the DXY, does the monthly look strong or does it look weak? Well, it looked weak, from 1986 until about 2014. So about 30 years it looked weak, with the exception of one little spike here. But even then, we never confirmed the 200 exponential and simple monthly bullish. Here, we're bullish. This is the beginning of a bull market. This is the beginning of a bull trend in the DXY, in the dollar in relation to world currencies. So more likely than not, if we're confirming into a bull trend, and we have been for the last couple of years, what's the most likely thing that happens? Well, we threaten the previous high. I mean, we already took out the two previous highs right here. So what's the next level to look at? Obviously right here. So 120 on the dollar is what I expect fully. What's that going to look like for the world? It's going to look horrible. Your emerging market, it's going to look horrible. I mean, it's the last thing that the world needs right now with all the shit going on is a dollar bull run, DXY bull run. And that's exactly what we're going to get, because markets are unforgiving. They don't know you. They don't love you. They don't give a shit about you. And you know what? Look, I care a lot about just people in general, okay? I may talk a lot of trash and, act all mean and hard and everything. But I give a shit about human race and suffering and quality of life, all right? And as bullish as I am on the DXY and what the technicals are telling me, the best case scenario for the world, for emerging markets, for third world countries, for just everyone in general, is for the DXY to roll back over. Now, unfortunately, as long as we see everything going on, Europe, UK, Canada, Japan, as long as we see all of them with looser monetary policy than the United States, the dollar is just going to continue strengthening. So if we don't think a Fed's going to flip-flop and everybody else, all the other currencies in this index are just, little bitches, and they're just constantly, easing and I mean, look at Europe. They're still fucking buying the treasury market. Look at Japan. They still have negative yields. I mean, how is the dollar going to lose strength compared to all these other trash currencies around the world? It's not going to. And that's bad for the world, for the people of this fucking earth. If the dollar has a short squeeze, there is literally tens or hundreds of $1 trillion in dollar-denominated debt held by people that do not generate dollar income. So if the whole idea behind, Forex, foreign exchange trading, is basically saying, well, the dollar's in a 40-year downtrend, so I'll just borrow in dollars and then I'll pay it back in dollars, even though my income is generated in euros. So if the dollar keeps losing value compared to the euro or the pound or the yen or, the Canadian dollar, whatever it is, and you have dollar denominated debt, inflation, essentially, it's the same argument of inflation, chipping away at the debt via loss of purchasing power. So what happens if all of a sudden the opposite happens? What happens if everybody's wrong and all of a sudden the dollar spikes and we see that short squeeze? Well, now your loan costs more money. So for 40 years, you could bet against the dollar and be right, with the exception of one period. So now if all of a sudden that changes, we're going to see a blow up. And we're already seeing it right now. I mean, look, Europe's in trouble right now. They are in trouble. I mean, it might not seem like it. And I know a lot of Americans have a very centric view and all they think about is the United States. Most of them have never left the United States. Our media obviously gives us, ridiculous lies and depiction of what's really going on in the world. And most people just eat it up. Okay, I have traveled internationally quite a bit. I have lived in other countries. I've lived all over the world, and I know a lot of people, and I have, a pretty good connection and idea as to what's really taking place in the world. Once you pull the curtains aside and look what's actually going on behind the curtain. And I mean, Europe is in trouble right now. Europe is literally in a land war for the first time since World War II? I mean, this is a big fucking deal right now. We're on the cusp of World War III with nuclear armed superpowers. I mean, not to doom and gloom it, but I would say shit's probably a lot worse than it's been in most people's lifetimes. So that being said, not going to get hung up on that, but the future is bleak right now, and that's a fact. So looking at Tesla, obviously got that bounce off the key levels. We talked about this Tesla scalp play. Elon almost fucked it up for us with his gigafactories burning billions of dollars. Still okay for now. We're about 10% into our predicted like 30% move. Not going to get greedy on this one. Still looks okay. Breaking through that resistance was key. A close above that fib level is going to look nice. Once we get up to 773, it'll look real good. And then we bust through 818, and then probably should make it about 900. And that's probably where we top out before coming down and putting in new lows. So playing out nicely, though, obviously. ARKK, trash, dead cat bounce. Probably goes to zero any day now. I mean, we can't even do technical analysis on this because it's pointless. And there's, I have no interest anytime soon of buying into this or anything. So for me, just look the other way. EDU. So just kind of consolidating here. Had obviously a little sell-off. Fully expect our target of 26 to get hit. Now, do we actually come down here like 1677 first? We probably do. It's sort of looking weak. Maybe we see a quick little squeeze come in. We hit our target and then it rolls over. I will 100% be taking profits right here. If we break down below like that $16 level roughly, I'm getting back out of this. I'm not pushing my luck on this. I don't think China looks good right now, and the markets are acting like everything's gravy and back to normal in China, and that is just not the case at all. NEO having a nice little bounce back up to resistance, basically getting that retest of the 200 exponential and simple, playing out nicely, obviously, retesting the 236 macro. But what is this really? I mean, it's basically a double bottom. Is it going to just double top and then go lower? It probably is. The first time it pushed up, it didn't get anywhere near the 200 exponential and simple. Now we're at the same level, but because time went by, they caught up to us. So we didn't have to go higher. They just had to come lower. So I think that's likely what happens. And then another push down, continuation. Eventually, I'm bullish on NEO. And, China electrification in general, or like battery technology, EVs, etc. But I think China's in for a world of hurt still. And again, I think it's going to be more of like a time capitulation scenario. So NVIDIA looking a lot like our semiconductors, obviously just a gauge of the overall health, as it's one of the stronger ones in the sector. Putting in new lows consistently, pathetic little bounce right here. Semiconductors do not look good right now, obviously. Bullish divergence, barely getting any play off of it. I mean, that is super weak. Apple pushing all the way back up to that 140 level, pre-pandemic highs. Not looking like it's going to be able to get above that level. It's trying to, but it overshot on the way down. Maybe it overshoots a little on the way up. Eventually 382 target and about 115 is what we're looking for. People are saying Apple at 100. I mean, that's just a 0.5. It's not that crazy to think of. Now, does it happen anytime soon? Probably not. There's a ton of, price action through this area. So it's going to take a long time to chew through the area between the 236 and the 382. That's what I expect to happen, though. Google is next. Obviously, a nice little push back up, retesting the 236. Again, trying to build momentum. All these charts look the same. Some just are a little worse. Some are a little better. But everything just looks the same. Do I think all of a sudden that's it? We're done? We're going back to the upside? Not at all. Not even close. Matter of fact, just looks more like bullish divergence, dead cat bounces to me. And then obviously, trade setup didn't quite get to our entry, unfortunately. I don't chase it, but, almost back to where our target would have been. Amazon next. Amazon. Oh, and also, we do need to discuss this. We discussed the possibility of a run-up to the split. It takes place on July 18th. I'd say that's exactly what we're seeing happen right now. Is this just a bullish run-up because we're about to get a 20-to-1 stock split? We're about to take our one pie and cut it up into 20 pieces. We still have one pie, but the market tends to, appreciate the fact that now there's 20 pieces. Amazon, again, just looking like trash, trying to carve out a double bottom right here, trying to put in some bullish divergence to push back up. But, this thing has a nasty, nasty retrace so far. This was our 2020 low. We obviously came down and violated the pre-pandemic highs right here, getting that little bounce. But, I mean, we're in deep right now. Amazon does not look good. Does not look good. And, the same way I expect retail, physical locations to get shit on, I fully expect online as well. Especially when people cut back on discretionary spending. People are less likely to purchase necessities off Amazon. They're much more likely to purchase like discretionary goods. Microsoft is next. Perfect pullback and touch after the break of our head and shoulders pattern of the 382. Perfect entry and trade setup has almost, well, I shouldn't say almost played out. It's like halfway there. So at what point in time do you move your stop loss to break even? Well, once we take out our next level of resistance, I look to move my stop loss to break even. So now if we come all the way back down to the 382, sure, I didn't make a profit. I get stopped out, break even, but I get a free trade. So right now, you basically have a free trade taking place. No way will we let the trade become a loser. So now our stop loss is at the 382, the previous low. So if we come back down, start putting in a new low, we're back out of the trade. But in the meantime, free trade. Maybe this thing just goes to new all-time highs. And we're like, oh, look, we bought the exact bottom perfectly. That was amazing. We don't expect it. We don't call out the bottom necessarily. But when we do get a bottom, it's typically going to be off of a key technical. Now, do I think this is the macro bottom? Fuck no. I think Microsoft goes much lower. But it's holding up very nicely, and we don't know. I can be wrong and also make money. That's the whole point. And right now, if we're wrong and this ends up being the macro bottom, we literally got the best trade entry ever. If we're right and this doesn't the macro bottom, we take profits along the way, and then we go much lower, and then we try the same thing again. So that's how a scalp can turn into a swing, into a investment. All right, let's jump over here and take a look at the gold chart. Very, very weak still. I do not want to see this thing just hanging out right here and just slowly melting down. Does not look good to me. Looking at our silver chart, this looks exponentially worse. I mean, we literally just threatened the cycle low on this last little push down here, and silver is melting down. I mean, we're below support right here. Our support level is, essentially 2140, and we're consistently trading below that, or arguably you could say it's the bottom of the channel at 2270. It looks terrible. It looks terrible in a bear market, very clearly on the daily. When we look at the weekly, again, we hit the 200 exponential, we get a little bounce, we come down to 200 simple. If we don't find support at this level, we finish the measure move, we potentially come back to like the teens. Doesn't look good. Macro though, you're like, you're mean to silver. Why do you hate silver? You just missed out on it. You're just mad because you didn't buy silver, and now you're just being mean to it. You don't know what you're talking about, asshole. Sure, okay, maybe. Or maybe I'm the most fucking bullish person ever on silver, and I probably own more of it than anybody listening to this. I mean, let's be real. This is a gigantic cup and handle pattern. This is 1980. This is 2011. We have a double top at $50. And what are we doing right now? Well, we went sideways to down in this descending channel, which is also part of a cup and handle. We bounce perfectly off of key Fibonacci levels from high to low or low to high, depending on how you look at it. We bounce the 0.5, which is a technical cup and handle pattern. So what is a cup and handle? Well, we have an initial top, then we double top with a rounding bottom in between, and then we start to put in a correction in a descending channel. We eventually break out of that channel. We bottom out somewhere around the 0.5 or possibly, 618, depending on if you're drawing top to bottom or bottom to top. Regardless, around the 0.5, we bottom out. We start to put in another rounding bottom the same way we did the first time. We eventually creep back up to that same resistance. And then eventually, when we get the breakout is the equivalence of the measure move of this pattern. Okay, so TradingView changed how the measured moves work now. So this tiny little measure move that we see right here, it used to be when you were looking at this on log scale, it used to be the equivalence of this little arrow. As you would move it down, it would basically like get bigger because it's in percentages instead of dollar terms. And then that would give you your measure move. Obviously, because they changed it, that's not the case. But the low right here was like 350. The high was like 46. So it's not unrealistic to think that we get a measure move of $46 from the breakout, which would take us up to around like, under $100 basically. Or alternatively, we could see a percentage equivalent measure move that could take us much higher, or Fibonacci extension target or something like that. You guys know my macro target on silver to the upside is $240. So I might be mean to silver. I might hurt someone's silvery feelings, or, make the apes want to yell at their mom because they're living in their mom's basement and they don't like it. Or no, I'm sorry, it's not the apes, it's the silverbacks. The gorillas. I might make the gorillas angry, but my target on silver is $240 to the upside. So I'm the most bullish. I mean, that's a 10x on a real life actual thing, not some crypto coin fake project scam. And again, I'm mean to silver. I'm mean to crypto. The channel's called Crypto Trend Trader. I have huge positions in silver and gold. I'm just mean to stuff when the charts look like shit. It's not because I don't like that asset. And I think sometimes that scares people away or turns them off, or they're like, this guy doesn't know what he's talking about. Why does he have a crypto channel if he hates crypto? What a dumbass. I mean, I don't care. I just talk shit about stuff that looks like shit. So I don't give people the wrong impression. If I'm like, well, the silver chart looks like shit, but I'm super ambitious about the future of silver, people are going to be like, okay, he likes silver. Buy silver, right? Well, I don't want you to listen to what I'm saying anyway. And honestly, the same way I feel about pot stocks, why I literally always say, now, these things probably go to zero, and I fully expect them to go to zero. But if they don't, and that's the same situation, the only difference is silver hasn't had a 90-something% correction. So, call it what you want to call it. I was bullish on Bitcoin at 3K when everybody was calling it a scam. I went hard into Bitcoin at 4,000. I bought 99% of my Ethereum, between $80 and $90. Well, I shouldn't say that. I bought a lot once it went to like 120 as well. But regardless, the fact of the matter is, I talk shit about stuff when the charts look like shit. And then when it starts looking gravy, nobody wants to listen because everybody else is talking shit about it. And that's literally just the market on a lag. So when we're bullish, everybody else is bearish still. When we're bearish, everybody else is bullish still. So people are calling for new all-time highs when we're saying, hey, the bull market's over. People are calling for new all-time lows when we're saying the bear market's over. So I would say that we're probably a lot better at determining trend, and that is the most important distinction between this channel and everywhere else. Hence why the name of the channel is Trend Trader. Trend is the key because we're trying to trade with the trend. So I don't call it pick bottoms and pick tops trader. Trend. The trend is the most important thing. It's cool to pick bottoms. It's cool to pick tops. It makes you look like an absolute fucking stud, but that's not what it's all about. You don't need to pick tops and bottoms. You need to capture the 80% move in between, okay? I don't give a shit about the cookie of the Oreo. We want that double stuffed. We want that fucking cream, okay? We want that easy money. That's what we're here for. You can have those fucking shitty chocolate fucking cookies. We just want that cream. I don't know. Maybe I'll reevaluate that. That's not the best metaphor. But anyway, Oreos are actually really good. That being said, I don't eat that trash. Gold silver ratio. Obviously, gold looking strong here. Looking like the beginning of a bull market for gold in relation to silver. So, I mean, what does that mean? Gold is 86 times the value of silver right now. So, I'll trade you one silver for one gold. Fuck no. How about you make it 86 silvers for one gold? And I'm like, well, that seems fair. That's fair value. So what's going to happen going into the future? Well, if this goes into a bull run, it won't be long before we see 100 silvers per gold or 120 silvers per gold or maybe 200 silvers per gold. Historic highs, all-time highs, like we saw right here in the Rona dump. That being said, if I'm right about silver and silver goes to 240 and the fair, if we have a weekly chart right here, we could say that the fair value, the average, the mean of gold silver ratio is about 80 because that's where the weekly 200 exponential and simple is. So, historically it's closer to like 10 in the Bible. Recently it's closer to, 50, 60. Right now it's about 80. So could it go higher? Yes. Could it go lower? Yes. It looks like it wants to go higher. What if gold goes parabolic and eventually silver hits 250 and we're at a 51 gold silver ratio? Well, we can use our target on silver or our target on gold to see if one is more or less overvalued or undervalued, etc. And then we get a realistic idea. So if we have a target on silver of, let's say, $250, and then we end up with a 50 to 1 gold silver ratio, that puts gold at $12,500. So maybe it ends up being a 20 to 1 by the time silver hits 50. Maybe it is 50 to 1. Maybe it's 75 to 1 and gold is at $10,000. We don't know, but what we do know is this gives us an extra edge on the relationship between those assets, the same way we look at like Bitcoin dominance and all that other juicy stuff. So next we have our pot stocks, obviously putting in some nice rallies off these lows right here. I told you guys we were loading up Well, I shouldn't say loading up. We were starting to build a position, looking for quick scalp gains, potential, entry for a longer term time frame. Obviously, our target was a 1.618 at a buck 41. We came down slightly under, about a buck 22. Now we're at a buck 56. So, I mean, nice little move, like 10% from, my last buy was I think it was like $1.36 or a buck 38, or I can't even remember. It doesn't even matter. What matters is we see a nice little reaction rally. But on the grand scope of things, I mean, this is horrible. Looks terrible. So what are we looking for right now? We're just looking for a reversion of the mean. I would absolutely love for, Aurora Cannabis to go to $3.70. Is it going to happen? Probably not. But if it does, we're definitely going to capitalize on it. Definitely looks like seeing a short-term bottom, but how many times do we see a bottom? We saw one right here, 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 and another one right here. And what do we do every time? Put in a new low. So is this the low? No, probably not. But it is for now. For now. Tilray, nice little move up here. This one typically overperforms. So if we start to see a bunch of strength out of Tilray, that's probably a good sign. Not really what we're seeing right now. I would like Tilray to take out its all-time low and just really scare the markets. Tilray and Canopy Growth have not taken out their lows yet. And so they're holding a little stronger, which is good. Like fundamentally, it's like macro, or like technically it's like macro stronger. But I would rather the flush out and just everybody that ever bought Tilray to be a loser just for a little bit, because that's when people capitulate, and that's what I'm looking to buy. I want to buy your capitulation. The same way that when we were at the top on crypto or stocks, we were literally dumping on people's faces. Why are we doing that? I'm not going to hold bags from the all-time high for multiple years back down to a new low. Not going to fucking happen. Not going to happen under any circumstances. Okay, will I be holding any bags? So what do? I say, here, hold this for a minute. I'm going to run to the bathroom. I'll be right back. And then we dump 20%, 50%, 70%, 90%. And then I show back up. And, this moron holding my bags is all sweaty and gross and crying. And they're like, oh, my God, man, I don't want these anymore. You got to take them back. And that's capitulation. When they're literally begging us to take back those bags at a fraction of what they bought them from us for. That's what it's all about. Sell high, buy low. Not buy high, sell low like these retards. Hexo is next. So, had a nice little bounce, a little like 10% off the bottom there. Still a little hesitant on this one, honestly, until something flushes out. We'll see what happens. I mean, it's almost 20% off the lows right now. Looks about the same, though, as the rest of them do. And we talked about the numbers on some of these, and honestly, I don't love the fundamentals as much on ACB as I do on something like Tilray or potentially CGC. Now, also, they're not as undervalued either. So, there's trade-offs. CGC had a little bounce. Again, I mean, look at the grand scope of things. And it's like, we're up 20%. Hooray. And then you look at the whole chart and you're like, this little thing right here, this is what we're looking at. That's a bounce. So if we do ever actually get a bounce on these things, it's going to be ridiculous. But in the meantime, grabbing a little 10, 20% scalp is always nice. Building a position from these levels with a previous all-time high up here at, $60, and we're at 4 right now. I like my odds. But I expect all pot stocks to go straight to zero tomorrow. Maybe even today. Probably next week, though. But within the month. Definitely by end of year. Eventually. Uranium, URA. Obviously getting a nice little bounce off of our target. So this was our initial target. I didn't take a scalp off this level. I think we go lower than this. Obviously, our target is lower, but that was a perfect bounce at the 382. No surprise, obviously. Just confirming into a bear market. They've just flipped bearish. Maybe we get a push all the way back up here. I think this probably underperforms. We go up maybe like another 7 to 10%, and then we do go lower. Then I'll start really looking at these. But in my opinion, these things have been overperforming. Everybody was piling into these things. All of a sudden, uranium's popular. Everybody's talking about nuclear. People are saying now nuclear is good again. That's typically my sign to get out of the way because the trade's already over. When everybody's agreeing on the trade is over. UEC, Uranium Energy Corp, again, staying slightly more bullish, not having as deep of a retrace. We kind of lost this ascending support We have another one here in yellow we're paying attention to. Once we break down from like $3, I think we get a quick move to 2, and that's where I'm loading back up. Roy obviously had a beautiful scalp on this one, came all the way down, put in a new low. This thing has been underperforming. I mean, fundamentally, if you ask me what's going to do better in a rising cost environment with inflation as uranium stocks go into, a bull market, is it going to be regular uranium stocks or is it going to be a royalty company? I would say the royalty company should do better because they're not affected by the rising costs in the same way. Obviously, that's not the case. And that's fine. Again, we could be wrong and still make money. That's all I care about. So some bullish divergence starting to develop off the 382. Again, do we come back up here? Do we just take the exact same trade again and just set our targets a little bit lower, maybe for the 236, maybe the macro 236? It's probably not a bad idea. But I'm kind of just hanging tight on this for now, uranium stocks. Same with bullish divergence. Again, not really doing anything though. So does it just roll back over and then all of a sudden we just flip right again and go lower? Probably. Again, looks like a lot of dead cat bounces right now that are tricking people. So Altria obviously had that sell-off there, the Juul news or whatever. We were discussing all this ahead of time before we ever knew about the Juul or anything. No, I'm not an insider. No, I didn't know what was going to happen. I didn't know. No, of course not. The chart tells us, and then the news eventually come out and say what the chart was telling us. So you show me the chart, I'll tell you the news. Well, the chart was saying we're getting ready for a capitulation once we lost the support, and then the news comes out and tells us what it is. Once we lost this 42.67 level, I really don't like this because we now put in a new low. We did get a little bounce off that, nice little move back up. Maybe we come all the way back up, retest the breakdown. Maybe we just top out right here around like 44 and then roll over. Too early to tell, but once this technical damage was done to the chart right here, once we took out this low, I got to just sit on the sidelines and wait and see. Long term, I'm very bullish on Altria going into a potential like recession. People are going to buy their cigs. I don't care how broke people are. They're always going to have money for cigarettes or a way to get cigarettes. $20 is $20. Sorry, that's an inside joke. I'm not sure if anybody gets that, but, so we'll wait and see what happens. But, we got to wait and just see at this point in time. Losing this support makes us, okay, we're waiting to see now. Losing this horizontal is like, whoa. I don't know if I'm even interested in this at all now. And then, if we come down here and take out 36, then it's like definitely not interested. But on longer time frames, this still looks fine. This is basically just a reversion of the mean on like the monthly. The weekly is starting to look gross though. KHC, Kraft Heinz Company. So again, we lost the ascending support right here. We're retesting it. We're at the 200 exponential and simple, lost them, retesting them. So again, if we reclaim these levels, this could be a beautiful scalp, and we were just patient, so we didn't get, stopped out because we didn't take the trade, which is great. That's the idea is, if we don't hold this level, we don't take the trade. We didn't hold the level, we don't take the trade. If we reclaim this level, maybe we want to take the trade then. 42% upside for a new high. Starting to look better. A close of the weekly back on top of this ascending support looks really good. A close of our daily above the 200 exponential and simple looks really good. So there's still some hope on this for now. But again, once we start violating key technical levels, I will just sit back and kind of watch for developments rather than just jump in. Cabot Corp broke below 200 exponential and simple, retesting it, just trying to stop from going into a bear market. Slightly lower target to the downside here. We'll see what happens. Again, this was just my guess of where we're going. We don't have to go there. Maybe that was the bottom already. We're already back at the 236. So maybe we just don't hit my target, the macro fib, and that was the bottom, and we start moving back up. And then, in actuality, our 0.5 target, like 68 or $70. So we'll wait and see. Again, I don't have to be right. We can be wrong and still make money. That's the most important thing. HUSA broke down below the 821. Looks like it's ready to have 821 across the downside. Fully expect this to come back down to like $3 or something like that. Now, because this had such a crazy move, we're at $5. If it comes down to like 320, that's a nasty pullback still, even though it doesn't look like a lot on the chart. That is a 35% pullback. So I'm not trying to like jump the gun and enter into something like this too soon, because you could definitely get wrecked. But if we come down to 200 exponential and simple and it holds and we put in another higher low, this thing probably runs. And, we'll see. It doesn't have to put in a new cycle high, but it likely does, honestly. But we'll see what happens with energy. That's sort of a counter trend trade, because right now energy looks like it might be done. ENI obviously broke down from the 236, still looking for target at the 382. Just got to give it time. All red histograms just melting down. I don't see any signs of a bottom. Literally, this is our last bullish trade, the next one we take. We're confirming into a bear market almost on the 200 simple, already on the 200 exponential. So we come down here to the 382, and then we take the scalp trade back to the upside for about like 15-20% for the reversion of the mean retest of a 200 exponential and simple before we get rejected and go lower. More likely than not. NAM, obviously we have that triple bearish divergence, came all the way back down to the bottom of the range. We're finding support on this long-term parabolic trend line. Put a trade setup in play. As long as this holds right here, the trade setup looks good, 24%, just back to retest the key fib level. And, another lower high potentially. Maybe it goes much, much higher. And, we can have a second target in play here. But as long as we keep oscillating between this support right here and this resistance right here, it looks like a pretty reliable scalp trade for like 20%, 25, 30% upside. 20, 25, 30, 35. Who knows? Veil, again, same thing. Ascending support line. As long as this continues to hold, looks good. Obviously came back down to our target right here. Potentially load up for a, new retest of like $20 or higher. As long as this holds, I would actually love to see this come down, tag the 382 perfectly, wick back up and close above that support. Doesn't have to happen, but that's the most reliable. When we bottom off of an ascending support and a horizontal key fib level or moving average, that's beauty right there. Mosaic Company, also keep in mind too that, all of these recent ones that we have looked at are all just requests. So I am not vouching for companies. I'm not talking about fundamentals. I'm not saying these are good investments. We're literally just doing technical analysis that was requested by group members or, community members. MOS, Mosaic Corporation, or company rather, lost that key level. We want to see it hold the 200 exponential and simple. We want to see it hold this key fib level. Still looks okay for now. Look, we've been talking about it. The market looks like it was ready for a dead cat bounce or bullish bounce or something. And, we're seeing it play out. A couple things are still looking like they're setting up for it. So, DRV, Drexion Daily Real Estate Bear 3X. So we got that initial spike up that we were talking about. But what we're really looking for is, from this level here, we're looking for this gangster spike. We're looking for that big spike right there. So this is it. We need to hold this level. If we hold this level, it looks good. Arguably, we could take a scalp right here, and a tight stop. We have the trade setup in play. 10% stop, 117% upside. I mean, it's over 11-to-1 risk-reward ratio. We do fully expect this to continue just melting down. I mean, it's a 3x bear ETF, so it's basically designed to just melt down. That's literally the whole point of this. But along the way, we see some of these big spikes. Now, most of them are not that big. We see like one big one right here, and that's kind of what we're going off. So it's possible we already have the spike and that's it, and it's done. But there's also, decent possibility that we do see an aggressive move up to the 382. And, at 10-to-1 risk-reward ratio, even if we have a 25% chance of success, if we flip a coin 100 times and we're right 25 times and we're wrong 75 times, every time we're right, we get $11. Every time we're wrong, we lose $1. We still win long term. We end up with $275 in that scenario. If we're right 25% of the time and we make $11 every time, what did I say? 225. If we're wrong 75 times and we lose $1 every time, we lose $75. So we make $225, we lose $75, we end up with $150. So when it's all said and done, even with a very low probability of success, if we have a very high risk-reward ratio, we can still find profitable counter-trend trades. But the less probable we are to be correct, the more we want to get paid if we are. Think about it like an insurance company. And I talk about this, analogy all the time. If you have a 1% chance of getting in a car accident, your insurance company is going to look at that and say, what's the probability of a car accident? 1%. how much do we have to pay you if you total out your car? You know, $50,000. So they have to make sure that they take enough money from you that they don't go out of business paying you the one time when something does go wrong. So then what if it's the opposite scenario? Let's look at an extreme. Instead of 1%, let's say 99%. So now if you have your insurance company and you have a 99% probability to get in a car accident when you go for a drive today, the insurance company will say, well, you have $50,000 car, 99% chance of getting a car accident, so your insurance is $50,000. And you're like, what? That's insane. That's the entire value of the car. And they're like, yeah, but you're about to go crash it. You just said that. You know, and we still have cover our own costs as well. So probably going to charge you, you know, $60,000. And you're like, car's only worth 50. And you're like, yeah, no. So you want the insurance? Of course not. And that's like sort of the trade-off between the risk reward and the, you know, probability of success. Or, you know, in this case, failure. Because, I mean, unless you consider crashing a car a success. Very nice. We crashed the car. Great success. Palantir. So yeah, as long as we hold this ascending support, it looks okay. I mean, this thing's obviously trash, complete meltdown. You know, the whole narrative imploded. Not surprising. You know, I told everybody back here this thing's getting ready to melt down. Of course it did. So, told you so. What's gonna happen from here though? Once we tag this 236 macro, it looks a little better. So if we can push up just slightly higher to just over like $10, maybe $10.25, I think we come back down, we retest the blue ascending support, and then eventually we get to push up to the 382. So maybe like 13.51 starts looking good. I'm not looking for a trade on this myself, as there's just too many of these, like, you know, what I consider trash companies that we could buy. It's like, why pick that one when there's so many other trash companies that are equal or better? You know, I told you guys the theme at the beginning of this year was energy, and if it don't make money, it don't make sense. And what do I mean by that? If a company is not literally profitable, I'm not investing in it. If it doesn't make money, it doesn't make sense. So, like, not CENTS, SENSE or something. Yeah, so no thank you on non-profitable companies for the overall. You know, obviously I've made some exceptions here and there on things like pot stocks. Your exception can be Palantir, whatever you want to do. You know, it's all up to you, obviously. But realistically, a retest of the 382 gives us about a 49% upside. And this assuming we have a slight pullback to our previous low and also this ascending blue support. And then that's where we would want to take an entry off of when that support holds. The problem here is we want to set the stop below that previous low. So if we lose the ascending support and then we take out the previous low, we want out of this trade. The problem is it's like a 20% stop loss, 18% with a 48% upside. So the risk reward is like 2.73 to 1. And you guys know if we're counter trend trading, we need at least 3 to 1 risk reward ratio. So that's a no. Boston Beer, Sam Adams. Looks like it's trying to carve out a bottom right here. I do like to see 3 white soldiers like this. If we see the daily close on this one, like a pretty thick green candle, preferably higher, like closer to like 350. Still look pretty good. Unfortunately, we saw it fail right here when it did the exact same thing. We saw it fail right here when it did the exact same thing. So I wouldn't put too much stock in this. That's some pretty key supports though. Maybe get a retest of 410. I don't know. It doesn't look particularly great. There's a million other things with better trade setups in my opinion. Bud as well, same chart, just looks terrible. You know, if this goes lower and we hit our next key support, it probably looks a little nicer. But as long as we have lower highs and lower lows, there's really nothing here. Now, going into recession, this starts turning around, looking a little more bullish, start carving out a bottom, by all means. IGO Limited. Obviously, pretty toppy right here. Last 3 days, it's basically like pretty nasty. I mean, this looked like an attempt to save price action, and then this looks nasty. So if we close our monthly like that, that's going to look real bad. Yeah, this just doesn't look good right now. Basically just confirming into a bear market. So, you know, we see a pretty clear sort of like head and shoulders looking pattern with a support, a slanted support, which is basically a sign of weakness when we see a descending support line that makes up our neckline, that's basically weakness. Horizontal is the most reliable. Ascending is, the, like, it'll usually underperform to the downside when it breaks. Overperforming like this, typically a weak head and shoulders like this with a descending support line like this will overperform to the downside, meaning it ends up having its breakdown, measure move, and then it gets nasty. Usually. Doesn't have to happen, but I would really be watching out for a situation like this. Something along the lines of that. And then to do our measure move, just want to take from the head to the neckline. Don't worry about my OCD. Basically, telling us more likely than not. Measure move to maybe like $7. Maybe we overperform and go much lower. And we hit the 1.236, perfect fib extension. So if we come down, if we lose the 1, it's not going to look good. If we hold the 1, it probably goes higher. So that's why we're looking for support right around that 1 or this green fib, like macro fib level. We'll see. I mean, it looks like it wants to see continuation of the downside for now, but it is at key support, but also it's a descending support, so it's a lot less reliable than, say, like a horizontal. SQM, I mean, still obviously very strong. The knife's kind of giving us a little double top action right here. So what's really happening on this? I mean, these look like they're potentially topping out, at least short term. I mean, and it doesn't look like it because on, like, long term, I'm very bullish on these, like commodity mining, electrification of the future type plays. But right now, I'm just not sure is the time. Now, these things are making all-time highs consistently, so if you're going to bet on something, might as well be in like the mining / precious metals, commodities, energy space. You might as well try to at least play the trend as opposed to just trying to like counter trend trade everything. Betting on losers. I'd rather bet on a winner, obviously. Let me grab a quick drink and then we'll take a look at crypto. Give me about like 2 minutes. Not going to take a long break at all, so don't go anywhere. Make sure to smash up the like button. If you haven't left a comment already, leave one. We'll jump in the comments when we get back. All right, let's keep it rolling. And remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. About to take a look at our Crypto Connect. All right, so where did we leave off here? Cool Sheet says Bitcoin 30K or 10K first. LOL. 30K or 10K? I mean, 30K is a gift, right? Because a lot of people are trapped at 30K. So no way we go there. No way. That markets do not give people gifts. I mean, if you said 25K or 10K first, I would say 25K. But if you say 30K, no way. We'll go to 10 before we go to 30. 30 is a gift. Michael the Failure is trapped at 30K with like $1 billion positions. and so are the rest of the cult. Because think about how many people that said 30K was the new, low, and we're carving on a bottom, and there's no way we go lower, and blah, blah, blah. Tons of people are trapped at 30K. So no way it goes back to 30K. That would be an absolute gift. I shouldn't say no way. I would say if you told me 30K or 10K, I would say there's a 90% chance of 10K first. If you say 25K or 10K, I would say it's probably closer to 50-50. UniQ says good afternoon from the not so Great Britain. Good afternoon, my dude. Good to see you. I spent some time in England myself and really liked it over there. People are cool. The language barrier I thought was going to be a little less than it was, but apparently you guys love your slang. So even though I understood the words that were being said, I couldn't really tell what the hell people were talking about. And you know what I'm talking about. But no, I love it over there, man. It's great. I mean, I love Europe in general. I mean, I love everywhere. Shit. What am I talking about? Ralph Smith says, bounce time for the Elliott Wave 4 to play out with the bounce before the new lows or lows before Elliott Wave 4. Holy shit. What? Ralph says, it's about time for the Elliott Wave 4 to play with the bounce before new lows or lows before Elliott Wave 4. I don't know. We'll look at the chart and you tell me if I answer your question. The Gigabyte. What's up, brother? Good to see you. Big old smiley face. Glad to have you, my friend. Jay Hoff says, it's almost impossible to buy anything on Amazon. If you can even find a name brand instead of some Chinese alphabet company, no guarantee you don't get a fake anyway. Is that really true? Or are you exaggerating? And is that like internationally or are you in the United States? If you don't mind me asking. That's funny though. I have heard of a lot of like knockoffs being sold on Amazon. They used to be pretty selective of who could get on there. And now you could tell they're slowing and they're desperate. So they literally just let anybody on there. So that actually does make a lot of sense that would be true. Trader Billy, what's up, brother? Good to see you. Bitcoin not following stocks as we speak. Yeah, exactly. Exactly. We were talking about like the short term, like quote unquote decoupling from the stocks as Bitcoin has been lately underperforming. Now, does that last? No, probably not. Realistically, what Bitcoin could do anything over the weekend. But yeah, last couple of days. But when you look at the actual daily chart on crypto, and then you look at, let's just minimize this for a second. Look at the daily chart on crypto, and then we'll look at the daily chart on the Dow Jones. I mean, is this the same chart? It is. It's the same chart. I mean, instead of looking at like the actual price action, look at the price action compared to the moving averages. Once we lost the 200 exponential and simple right here, we sell below it, we come back up, retest, we can't get back above it, and then we melt down to a new low. And it's the exact same thing taking place right now. Now, the difference being that over the last couple of days, that the stock market actually took out that 8 and is retesting the 21. And then here, Bitcoin, is underperforming and it can't even get above the 8. So why is that? Well, because everybody's buying trash cryptos instead. So all the trash is like pumping and looks good in comparison. I mean, look at Ethereum. It looks better. At least it's above the 8. If it was doing the same thing as the stock market, it would be up at like 1337, that elite number. But it's not. It's underperforming because crypto's trash. Now, the further we get out on the risk curve and the more trashy cryptos we look at, now look, this one's overperforming, and that's trash, obviously. This one is performing exactly the same, and that's trash, obviously. This one is, looking even better and potentially about to have the 821 cross, and that's trash, obviously. So while Bitcoin looks weak, while Ethereum looks slightly stronger but still weak, all we're seeing right now, and this is my exact point why we haven't seen a bottom in crypto yet, because people are still buying the dip on trash. As long as literally every time we throw something in the trash, aka we have a sell-off, people rush in to grab that out of the trash and eat like the last bite of our sandwich, or drink the last like little sip with like the ice that's left in your cup after you drink it and it's melted down, and whatever you're drinking is like mostly diluted and there's barely anything left in there. It kind of just tastes like a soda when the syrup runs out, and it still has like a little brown tint to it, but doesn't taste like Coke. That's like people buying cryptos every time they sell off. You're digging through the trash. You're dumpster diving. That's what people are doing. They're dumpster diving. As long as people are dumpster diving every time we have a sell-off, buying absolute garbage, the same thing with like Revlon. As long as people are dumpster diving and trying to buy all this trash, the bottom won't be in. The bottom will not be in because that's not what bottoms look like. Capitulation is what bottoms look like. And it could be time or it could be price. But as long as we see people swooping up all this trash, we literally see cryptos imploding, billion-dollar projects going to zero, and yet people are still buying stuff that is essentially like the equivalents of these projects. They have no history. They've been around for only a couple years. They've had a ton of money flow into them. They have no actual real product or actually accomplish anything, and yet people want to run in and try to buy them every time they go lower. I mean, that's not what the end of a bear market looks like, in my opinion. Trader Bill says, Bitcoin spot and CME show both a different style of potential bottom. And CME show a different style of potential bottom. I mean, they look exactly the same, Bill. I'm not sure what you're talking about. Are you talking about the futures Bitcoin? These look, they look exactly the same. This one is literally based on moving averages. This one is basically put in a deeper retracement because that was over the weekend when we had that like sell-off, that flush out. But we're still at the 8 on the spot market. And when we look at the futures market, same thing. We're at the 8, maybe slightly lower. So they look about the same to me. The only difference being that these don't have that big capitulation wick as we like flush down to like 17K. Trader Bill says local bottom. Maybe. I don't see any bottoming signs yet. Not even close. Not even on, arguably on a 4-hour, you could say there's at least like a short-term bottom trying to be put in right now. J Hoff says, in the U.S., yeah, it's a problem. Yeah, okay. I haven't been on Amazon that often, like, honestly, lately. And to tell you the truth, man, I'm one of those weird people who just reorders everything every time they need it. So I'm not, like, out searching for a bunch of stuff. I'm usually just, like, going and just buying my same stuff over and over again. Definitely a creature of habit as far as my consumption. Trader Bill says, gotcha. Good to see you, Bill. Glad you made it, man. Ralph Smith says, I was referring to the macro Elliott wave 5-wave correction structure. So you're talking about the life cycle of Bitcoin from inception till 70K. We're working on the 3. I was asking about the 4th wave and if time-wise it looks like it's getting close, i.e. bounce time for the macro. Okay, so we'll take a look and you tell me if I'm answering your question. So first on the Bitcoin futures chart. So, okay, let's just talk about our technical analysis and then we'll look at the macro structure when we get to the spot chart and we can talk a little bit about like my theory and what's been playing out. So what we're seeing right now that I'm noting that's most important on Bitcoin on our daily chart is if we take the low from 2018, like 3K, and we run a fib all the way up to 70K to 20K. Shit, Bitcoin will never go back to 2008. Up to 70K, we have our macro fib in white right here. And then also, or I'm sorry, in green. That's the macro fib in green. Hang on. Let me just move this out a little bit more. And then let me move this one back. I have certain ways that I always draw my stuff. And if I draw for some reason something slightly different, sometimes I will just confuse myself. So typically I will drag out the longer time frame further to the right. So in this case, that's our green fib. And then if I fib from a like higher low, that one will be, a little bit closer. So now the macro is on the all the way right. The next one is in the middle. And then our short-term fib is all the way to the left. So that's just my way of doing it. Obviously in this case, I had it incorrectly, but regardless. So the green fib is from 3K. The white fib is from 4K, the COVID dump. So once we lost the 236 on both those fibs, that was obviously key support. Once we broke down from that, we temporarily found support at that previous bottom right here. And then once we broke through that, and Michael became the failure sailor, we obviously came down and we see a very, very strong support at the green fib, at the 382, much less at the white, almost none at the white. So what does that tell me? It tells me that most people that are fibbing from the all-time low, not this low right here. So if you were going to argue that this is a 1, that's a 2, this is a 3, and then we're coming down for a 4, and then we're going to go higher for a 5, I would say you're wrong based on, that alone. Because if that were the case, we should have seen a much stronger support at that 382 level, and instead we just dropped straight through it, no problem at all. And then obviously now we're seeing clear support and resistance at the green 382 from 3K. So that is our target, obviously, and has been for some time. And people are like, Bitcoin is going to all-time highs. It'll never go back to 20K. You don't know what you're talking about. You're dumb. And you're just hating crypto because you missed out. Well, sure, okay. But now that I'm right, maybe we should pay more attention. Obviously, you guys are because you see my track record. Now, that being said, if we can't get back above the 382, the longer we consolidate at it, the more likely it is to let go and we just go deeper. So that's what I'm looking at. Now, here we see bullish divergence. We have a low right here. We have a slightly higher or arguably same low. Stochastics, that is not the case. We have a higher low, then a lower low. So we're not seeing confluence for bullish divergence between those points like we want to see on both our indicators. We're still well below the 8 and 21, below the 200 exponential and simple, and obviously very much in a bear market. So while this definitely looks like a dead cat bounce off of our 2017 high, does this hold up? I mean, this was our little hiccup on the way up. Probably holds up for a little bit, but to tell you the truth, I mean, if Bitcoin pushes back up to 30K, that's a gift. How many people are going to be ready to get out of Bitcoin if we move back to 30K? I would say a lot of people are begging, hoping, praying, sacrificing chickens, whatever, to try to get out of their position at break even. And then on top of that, I mean, there's a ridiculously large amount of people that are trapped from 70K to 30K. I mean, this is years worth of distribution. This is literally years worth of just dumps straight on people's faces. I mean, there's people right now that were buying the breakout at 70K. I know retards that were buying the breakout at 70K, posting up, bags are packed, here we go, 100K, see you by the end of the week. Yeah, okay. How did that work out for you? Obviously, you're dumb. But that being said, it looks terrible. I mean, this chart still looks absolutely terrible. I see no signs on the daily chart of anything good happening. Now, arguably, you could say, yeah, but we're in the bearish control zone, so we'll got a bottom soon. Sure, I mean, we were in the bearish control zone here. We went lower, we went lower, we went lower, we went sideways, we went lower, we went lower, we went lower. So, I mean, I'm not ready to call a bottom because we're quote-unquote oversold or anything. Now, we do have a couple green histograms. That's great. But what happened right here, this was our bearish reset when everybody was saying, it's bullish, we're carving out a bottom, Bitcoin can't go lower, this is it, loading up, going back to the upside. And what ended up happening? I was right. It was obviously a bearish reset. Price action went sideways, oscillator trended back to the upside, and then we just melted down to new lows. So once again, and a bearish reset is something I made up. So you're never going to find that somewhere else. That's literally my own creation. But 100%, that's exactly what took place. Obviously, if you found me before then or in hindsight, it's very clear. Now, is that going to happen again? Maybe. Are we going to actually start moving to the upside? Maybe. But we're not seeing any signs of anything good. So, I just assume we continue having bad if we've been having bad and we're not having good. Now, here on the weekly, we have closed our weekly below the 200 exponential, and it's already got a negative slope. We're about to close a weekly in 4 hours below the 200 simple, and it has basically a flat slope, so it's very close to having a negative slope. So if we can't get it back above the 200 exponential and simple, we definitely can't get to 30K. So I'm not even paying attention to 30K right now. 22,500 is huge. 23,900 is huge. If we can't get above those, we definitely don't go higher. And then look at this weekly. We see all red histograms. We're still very much in the bearish control zone. We see no signs of a bottoming pattern at all. I mean, you could argue that the knife peaked right here and that we have some bullish divergence on the knife. But, I mean, that's one little thing saying like, hey, look at me. Doesn't tell me anything. And then we look at the monthly. This isn't the best chart to look at. But, I mean, look at this monthly chart. I mean, 7 days left in the month. This is fucking nasty. Does this look like it's about to bottom right now? I mean, I obviously called the perfect drop. I said we have one monthly candle that got us from 20K to 30K. So wouldn't be surprised if by the end of the month, and this is me quoting myself, wouldn't be surprised if by the end of the month we drop straight from 30K down to 20K and we take out all of that price action from the way up. And that's exactly what happened. So, obviously we got lucky. Once again, I have the best Magic 8 Ball ever, and the crazy thing is, got it used at the pawn shop. So, I mean, who gives this thing up? That's crazy. Absolutely crazy. But that being said, now what's next? Well, we took out that 1 monthly candle in a single month and capitulated through key levels and, touched tips. We violated, our previous all-time high, which has never happened before. So now what do we have holding us up from here? Well, we have this candle right here, and we have this candle right here. So if 1 monthly candle couldn't hold us up for that 10K dump, what happens if these 2 candles can't hold us up? I mean, that's 14,000. And that's my bottom, short term. That's what I'm looking for. So everybody else is expecting us to bottom at 20K. I say, I'll see you at 14,000 and then we'll talk. So I think that's much more likely. Do we see any signs of this monthly bottoming? All red histograms, hard sell. Trend is strengthening to the downside. We have the biggest, reddest, nastiest candle. We obviously had a pretty nasty one right here, but this velocity is picking up. It's getting worse, and we're about to get an 821 monthly cross to the downside for the first time ever. Obviously, it's CME chart, so it's not very reliable. I mean, I don't see any signs of a bottom right now. I mean, just because, we're at 20K. We're at the 382, so it has to be the bottom. Yeah, I don't know. See you at the 0.5. Then we'll talk. All right, so for the Bitcoin spot chart, again, very much the same. Obviously, we saw the, candle down and the candle back up. Obviously happened over the weekend, so we don't see that same thing happening. We see a little bit different action on the indicator oscillators. We basically see a double bottom right here, a slightly higher low. We see a lower low on price action, bullish divergence. And then for the stochastics as well, we have the low down here, and then we have a lower low here. So we do not see that bullish divergence. So again, we're getting mixed signals from the Bitcoin chart, whether it's spot or futures. Now, if we look at our fibs, and we can look at the macro and see if this is what you were talking about. I suspect this is the move that you're talking about right here. So if we look at our macro right here, basically just kind of zoom in back out, and we go from our $3,000 low back here in 2018 to our high right here. We have our fib in blue, and we have come down to the 382 perfectly, which obviously was our target. So we hit the target. So now I think what your question was, Ralph, is are we now getting ready to put in the 4 back to the upside before we see the 5 to the downside? I believe that's what you were asking about. And essentially what this is saying is, well, if this is our macro 5 right here, which was basically, on the giant macro chart, Bitcoin's life cycle, we essentially see the 1 is our first bull market, the 2 is our first bear market, and then we see obviously, the halving and then run to the upside. And then obviously second bull market and then second bear market, halving, run to the upside. And now here's our third bull market and then, topping out. So obviously now we're correcting. I believe that's what you're talking about. And we know our previous corrections and we've looked at them a million times, and there's an in-depth video on all that good stuff. But what we're looking at now is essentially, if I'm correct, and this is an expanded flat, and we basically have an A, B, C correction taking place, and we have ABC inside the A, we have ABC inside the B, and then we have 5-wave structure, which is the rules for an expanded Elliott wave flat, or expanded flat distribution, or whatever correction you want to call it. We basically have the 1 was the initial push down, the 2 was the push back up, the retracement, the internal retracement, and then we have the 3, which is our push down, and then the 4 would be the retracement of the 3. So if we start to bottom right here, which is possible, and we're showing some signs of a potential short-term bottom, if we start to bottom right here, that's when we start looking for this. Now, what we know is, the most important thing to pay attention to is, we know that on a longer time frame, the max we can come up is the bottom of the 1 with the top of the 4. So that gives us basically a maximum target of $35,000 before we invalidate, this part of the structure. So $35,000 would be our max push back up to the upside. In a best case bullish scenario. And that gives us from where we're at roughly right now, like a 63% move to the upside. So if that's what you're talking about, yes, there's possibility we're getting ready to do that. But we don't know yet. We don't really, we honestly don't know. More likely, we underperform the move to the upside and we make it to about 28K. But again, that looks like a gift to me. That would be a gift from the market if we came back up to 28K. Because there's tons and tons of people that are trapped that just want to get the hell out of these positions right now. So now I know there's a ton going on this chart, but I want to just fib from the top of the 2 to what we can, let's just assume that would be the bottom of the 3. I'm going to make this one extremely bright and thick and juicy, so it's a little more visible, just because there's so much going on. But if we assume that that was the bottom now, the first thing we're looking for is a retest of the 236, so we can confirm that we have, hit the initial minimum retracement for a internal fib retracement. That's 22,322. So if we make it up to there, then it starts looking like, okay, we can start calling this the bottom. And then we look for our next fib, which would be the 382, which is about 25,850. And then, finally, the 0.5 would be roughly 29,000. And then again, the 618 would take us up to that bottom of the 1, which is roughly like 33,000. So any of those are viable. Once we hit the 236, we can start looking at the 382, the 0.5, or the 618. Realistically, if we want to look at, God, it's on here somewhere and I can't, maybe it's not. I don't know. There's so much going on in this chart. Forgive me. The last one was a roughly 0.5, almost exactly a 0.5 retracement. So if we do the same thing again, the 0.5 is going to take us back up to that 29,000. Now, again, to me, that's a gift. I think there's a lot of people that would absolutely love Bitcoin to get to 30K so they can just dump their bags, because they were loading up here at 30K and then we capitulated and they lost 33% of their value. They held on like a champ. And now, they just want to get out at break even. So it's going to be very, very difficult, in my opinion, to make it above 30K. Does not mean it can't happen. But I think it's much more likely that we get the minimum internal bullish retracement, which is obviously it's bearish downtrend, but it would be a bullish retracement of the internal, which would be a 382 retracement. So, in this case, the 382 retracement would be the most shallow trend following retracement, which in a bull market, the 382, if we found that as support and then started to go higher, that would be a shallow bullish retracement. But since we're in a bear market, and the internal retracement would actually be a shallow bearish retracement if we topped out at about 26,000. Now, there is obviously another scenario where I'm wrong, okay? And this isn't the bottom. I'm wrong, and we actually go lower. Maybe we go down to 16,000 or 14,000, and then that is the bottom of the 3, okay? And we don't know yet. We don't know. But even that would be completely fine. We could literally have a super deep 3 down to 14K. We could run all the way back up to, 35K, and then we could come down and go even lower. So any of those are possibilities. The most important thing is look what's most likely, the probability, most realistic, etc. So obviously that was the bottom of the 3, that little capitulation right there. And we weren't necessarily expecting that over the weekend, but obviously it played out. So we'll see what happens with the 4 now. There's definitely some potential that we're bottoming out here short term, but also we don't want to get cocky right here or greedy or whatever. There is a lot of people trapped from 30K, a lot of people. So it's going to be very, very difficult to get back above that level, in my opinion. And then if we switch over to our weekly, looks nasty. 200 exponential rolled over bearish, 200 simple, we're below it right now. In all of Bitcoin's history, we have basically found support at the 200 exponential and simple, and that has been the bottom of the, depending on what chart you look at, we're on the Bitstamp chart, that has been the bottom. And we one time ever closed below, opened below, and then we didn't close back below again. So that we have never opened and closed a candle on the weekly below the 200 exponential and simple. And we are literally, on spot markets, we are literally 2 days and 7 hours away from opening and closing a weekly candle below the 200 simple. So I'm not trying to get bullish right now when all of a sudden Bitcoin is doing bearish stuff it's never done before. It has never taken out its previous all-time high. It has never closed and opened and closed again below the 200 simple. I don't like that. That to me looks like a change. And when we see things change, it takes away the reliability of, whatever data we're using, that it's never done this before. So once it violates that, it looks bad to me. This looks terrible. Bearish control zone. The bears are very much in control right now. The bulls are barely existent, if they're even still existent. And we're seeing all red histograms. We're below the 0 line, and we have a long red negative slope line. So very, very bearish on the weekly. And then on the monthly, when this monthly closes in 7 days, if we're not back above 36,000, we get the cross. And when the 821 crosses bearish on the monthly on assets, that's really bad. Now, we did talk about the potential scenario where the previous 821 cross took place. That was our bottom. The previous 821 cross took place. That was our bottom. So if this crosses, and then that tells us if we do the exact same thing we did in the last two bear markets, that next month's candle, 7 days from now, we are 30 days period, and that's next month's candle, that could potentially be the bottom based on our last two bottoms. But also, we're doing a bunch of stuff we've never done before. So how reliable is that? Because we could say, hey, that's our bottom like we did last time. And then all of a sudden this thing just completely melts down to 14K or 8K or 6K or 2K or, goes to zero. I mean, anything's possible. So it's worth noting that the 821 cross on the monthly has been the absolute bottom, which would be next month's candle, basically. It's definitely worth noting. And maybe we do. Maybe we come down here to 14K. We put in that bottom. We get that cross over the next month. And then we shoot straight back up to 30K. It's possible. I just wouldn't count on it. I mean, right now, the most important thing, protecting ourselves. Because, I mean, these charts don't look good. Crypto looks terrible. And look, I'm going to tell you right now, going back to this chart really quick. When this bottom was put in, nobody was buying altcoins. Nobody was buying altcoins. Okay? Nobody was running and buying trash bag projects that are a couple years old, that have no actual product, that are worth billions of dollars, that literally do nothing. No one was buying them. And, we had Ethereum, for some of these. We had a couple of these other crypto. Nobody was buying these cryptos. Nobody was buying Cardano, at the Bitcoin bottom. Nobody was buying Ethereum at the Bitcoin bottom. Well, I mean, there was one man. But you get my point. The masses were not. Right now, the masses are swooping up altcoins. And we'll see that in a second on the Bitcoin dominance chart. So does this seem like a bottom when everybody's trying to pick the bottom and buying up altcoins? Yeah, fucking right. Yeah, right. The market does not. That is a softball. And the market does not throw softballs. Matter of fact, that's not even a softball. That's a T-ball. Okay? They don't just stand the ball up right in front of you and say, do your best. No way. Too fucking easy, in my opinion. Ethereum, so the trade setup's playing out decently. We got 76% upside with 7% stop loss. Entry off of the 382 macro. Looks good so far, a couple percent up on that. Obviously, Ethereum is looking better than Bitcoin in the last couple days, but, underperforming the alts pretty heavily. So, and that is obviously our 2020 low right here to the high right there. You could arguably say, hey, why aren't we fibbing from back here? To tell you the truth, they're so close to each other, it really doesn't matter. I mean, there's almost no difference on them. So you could do either one or both. I'm just using one or the other because they're basically the same. They're like a couple dollars off of each other. So, so that being said, again, looks terrible, but trying to carve out maybe like a short-term bottom or something. Here's our weekly chart. Again, below the 200 exponential and simple. Ethereum did not have a scenario where it got picked up off that because of it didn't have, obviously, as much history because it takes so long to populate 200 exponential and simple. But we were well below what would have been the 200 exponential and simple. So it's very obvious that we could easily overshoot this, I mean, just substantially to the downside. We could see $400, $500, $600 Ethereum, and I would be surprised 0%. And then on the monthly, again, we see the 821 cross getting ready to happen. We see the all red histograms. We're basically at the slope line now, so maybe this is our little bounce, but I mean, this just looks nasty. And when the 821 cross occurs on Ethereum, we still have, months and continued just nastiness to the downside. So I would expect that on altcoins as well. What works for Bitcoin does not necessarily work for altcoins, including Ethereum. And then again, when we look at this Bitcoin dominance chart, this is the top of the altcoin market. And did we see buying coming in on the altcoins? This was our top. This is our bottom. So, I mean, Bitcoin is gaining dominance as the bear market is taking place. Bitcoin has gained a little dominance, but people are still way too confident with the altcoins, in my opinion. And as far as this looks, this actually is doing something I didn't expect. Now, it's not. We still have 3 days left. But I expected this to hold that support right here. for Bitcoin dominance above the breakout and then continuation to the upside. So, maybe there is a case for all of a sudden Bitcoin goes back into a bull run and altcoins start crushing it again and everything's gravy. And, but what is the catalyst for that? What's the catalyst for all of a sudden crypto just being super bullish and all the trash bag 2,000 altcoins all of a sudden being a good buy and everybody piling into them and Bitcoin dominance going down? What's the catalyst for that? What? The Bitcoin ETF is going to do that. Regulation is going to do that. The Fed flip-flop is going to do that. I just don't see it. So, we'll see. I expect this to rally back up, Bitcoin dominance to rally back up over the weekend and close above resistance. Now, if it doesn't have to be game over. But if we start coming back down here, this is going to look like a failed breakout. And, money is piling into altcoins. Or maybe, Bitcoin gets hacked and all of a sudden the blockchain is compromised and everybody leaves Bitcoin because, it's going to zero. And that's why alts strengthen. And we see this. I don't know. There's lots of possible scenarios, but, we're not looking for fundamentals or news. We're just saying what the technicals do. And this, to me, this does not look like, a bottom. People are not buying altcoins at the bottom. Everybody is not flooding into trash bag projects that won't exist in 2 years at the bottom. While we're seeing literally like billion-dollar like companies and projects blow up, go to zero. I don't think so. Yeah, right. Total market cap, finding support at the 200 simple. Obviously slightly more bullish overall than Bitcoin is. We touch tips. Again, something we've never done before where the market cap does a, full round trip and retouches the previous all-time high. Somebody asked me how low could this go? Realistically, if we go to our monthly chart right here, this purple line, somebody asked me specifically, and I don't know where they got this number from, if they watched the stream and saw it, or if they were just asking me, because I haven't flipped to the monthly chart on this that much lately. Maybe you're just doing the same thing I am. Somebody asked me, can, crypto market cap go to like 540 or 50 billion? 100%. That would just be the previous all-time high. So it could definitely have one more leg to the downside. And then obviously where we're at now was just a wick of the previous all-time high. So I definitely think we could. What does this chart look like? Well, the trend is accelerating to the downside. We see one big candle, one bigger candle, one biggest candle. We see all red histograms. We see the stochastics are moving away from each other, accelerating to the downside. And obviously we saw bearish divergence taking place. So there's no surprise right now what's taking place right now. So could it go to, 500,000, 530,000, whatever? Yeah, it definitely could. Or a billion, sorry. It definitely could. So Matic had a beautiful scalp on Matic over the last few days. Obviously, completely overperforming. This was our bounce off the 200 exponential or simple bullish divergence. And, Matic just so happens to be one of the cryptos that I don't hate nearly as much as the rest. Doesn't mean anything great or anything, but, we got lucky and it overperformed. It's traded very well, and we've had some real nice trades in Matic in general. So, is it done now, though? We retested the 236, shorter time frames. We're like coming back up and hitting resistance. We'll see what happens. I think this one already had its legs. And, here's the truth. When the market looks like trash, people pile into whatever gains momentum. So this picked up some momentum. People piled into it. It probably just melts back down now. Avalanche had a decent little bounce right here. Retested the 0.5 from the 618. Very technical to oscillate between the two Fibonacci's. Maybe it goes back up here. If it does, maybe the 382 probably goes lower. There's a lot of resistance at this level. And honestly, I'm not bullish on cryptos right now. Solana, the chart looks okay, but the project looks like trash right now. There's absolutely no way I would put any money in Solana right now, as it basically just looks like, you're asking for your money to be taken away. You're like, yeah, but that's just one whale, and they're doing it for the greater good. Well, I don't believe in greater good theory, okay? If there is a train coming, and there's two people laying on the tracks, and you could push somebody, onto the train tracks to save the two people's lives. Are you going to murder someone to save two other people's lives? I'm not. I might try to save the two people, but I'm not going to sacrifice one, to save two or 100 or whatever. Not going to happen. You want to sacrifice yourself? I want to sacrifice myself. That's one thing. I'm not going to force someone else to sacrifice their self. In this case, Solana forcing, a giant whale basically to do what they want to do for the greater good of the community and the project, no, fuck no. I'm not into that. That's a dead project as far as I'm concerned when you start pulling shit like that. And that's part of the reason I don't like Ethereum is because they've rolled back the chain. They've reversed transactions. They've done some shady fucking stuff. And you know what? Part of what I like about crypto is decentralized. So, when you start getting into all these different things and you say, well, this crypto is good, maybe it's not decentralized, but what, hang on. The whole reason we like crypto, I like crypto, is because it's decentralized. So if you take away the one thing I like about it, I don't like it anymore. So, there's always going to be trade-offs between decentralized, between security, between speed, between cost, etc. There's all these different trade-offs, but what's the one I don't want to trade off? Decentralized. I definitely don't want to trade off that, and I don't want to trade off security either. So everything else is subjective at that point in time, but I'd be real fucking careful with Solana. This is a zero project as far as I'm concerned. This goes to zero after what they did. Maybe not, though. Crypto investors or whatever you want to call them, speculators, are fucking stupid, so it wouldn't surprise me. Not all of us, obviously. We all have our moments, but let's be real. 90% of this space is moronic cult members. Solana, I mean, I honestly just would not touch this thing with a 10-foot pole. Basic attention token had a nice little bounce off of the fib. Obviously overshot a little bit. Had to push back up. At resistance right now at the 0.5. What happens next? I mean, there's a lot of resistance at this level. We have a resistance here. We have support right here. We lost the level. I expect the resistance to hold up. And then, what happens after that? We'll see. Tons and tons of bullish divergence. Everybody just flooding to altcoins. To me, it just looks like a way to get dumped on again. You pump the altcoins back up, and then you distribute all over people's faces, and then you go back into Bitcoin or whatever, stable coins or cash. Chainlink trade playing out okay so far. Definitely been underperforming, honestly. I thought this would shoot back up here pretty quick, at least to the 0.5. It's up like 30-something% off the lows, which is okay. Not great, though. Algo, basically overshot the resistance or overshot the support, and then now it's retesting it as resistance. Likely goes lower. I mean, there's a ton of resistance through here, and we're not able to break back above it. We go to the 786. If we do break back above it, maybe go to the 0.5. So there's some potential, but I don't know. XMR, Monero, we're talking about buying the bottom of the channel. First potential scalp trade setup, 76% upside for the reversion of the mean retest at the top of the channel. We're a little ways in there. What about 20% up? So not bad. Already like 2-to-1 risk reward ratio if this was our target. So at this point in time, what do? Move the stop, move your stop to break even, 100%. Again, bullish divergence, a bounce off key support. Maybe we're putting in a giant cup and handle. Definitely a possibility. So Cardano, again, just complete trash, complete underperforming, descending triangle, not getting any kind of move back to the upside, clearly finding resistance at the heart line of the macro channel. Complete meltdown right here. Looks terrible. Looks absolutely terrible. Pathetic. So what is this? Is this a cult dying? Well, Cardano's in a weird space because it's very culty. There's definitely a cult following. There's a lot of worshipers of Chucky. Even though he's been exposed as being a blatant liar and failure of a human being. That being said, nobody's really selling, but also nobody's buying. So you have a cult. The cult's not getting any bigger, but it's also not getting any smaller. So one of two things happens. Either they find a way to recruit more cult members, and then eventually the price can go back up, or eventually, they drink the Kool-Aid and a bunch of cult members die from drinking the Kool-Aid, and the price goes way down. I would say at this point in time, the cult is going to get smaller, and they're going to get smaller by drinking Kool-Aid and dying. So Cardano probably goes lower. KNC, Kyber Network. So finding support at that 786 in blue, back above this ascending support line, the bottom of the channel right here, like we discussed, which was a requirement before we could enter into any sort of scalp or swing trade. Looking for that potential reversion of the mean trade to the upside. Obviously looks okay right now. We reclaim that level, so we'll see. But 63% upside, 21% downside, 3-to-1 risk reward ratio. I don't like it. I didn't take it, but you could argue there's something there. I don't know. I don't like it. Waves. US looking like a double bottom, bullish divergence, arguably the third drive of bullish divergence. Had a nice little pop all at once, like a 40-50% move to the upside. but hasn't really seen any continuation from then. Actually gave back about half of it and then just kind of went sideways. So could go either way. Looks okay. On the weekly, I mean, it bounced a key support where you would expect it to bounce, but you would expect the 382 to be resistance. So, you know, it's going to be tough for this thing to get back above $9. Very bearish on the weekly. And then the monthly is not going to be very useful, but, you know, not if we close the monthly above 784, it looks a lot better at least. You know, because we're rejecting lower prices twice in a row. You know, double bottom. We'll see. This doesn't look good. The momentum to the downside doesn't look good. 821 getting ready to cross down. Crypto looks bad right now, really. I mean, the best crypto chart to look at right now, if you want to be bullish, especially like irrationally bullish, is probably like the 4-hour, because at least the 4-hour looks like okay. I mean, we're still well below the 200 exponential and simple, but at least the like 821 have had like a bull cross. Now they had a bull cross and then a bear cross and then a bull cross again, but at least there's something going on. At least there's some momentum. At least there's some potential. But I would not get too excited about crypto. If this was the bottom, we should have moved a shitload already by now. There is no way we should just be hanging out at 20K if 20K is going to be the bottom, in my opinion. So, all right, let's jump over in the chat here, see what everybody's saying. Then we're probably going to go ahead and wrap it up there. Hopefully I answered your question, Ralph. Okay, you got it. All right, hopefully that was a you got it, as in you answered my question. What's going on? Indian Kitchen. Not sure I recognize that name. So if you are new, welcome. If you are old, welcome back. Sushi. You want to see sushi? I haven't looked at sushi for a while. God, I thought we vowed never to do technical analysis on cryptos named after food. I'm not sure. Was that a thing? If it wasn't a thing, maybe it should be. So we'll look at the chart and we'll make our final ruling. So if sushi looks good, we'll potentially look at future food cryptos. If sushi looks bad, we'll never look at food cryptos again. So could go either way, man. I'm pulling for you, though. I'm pulling for you. Oh, no. Oh, no. What are you doing? Oh, Indian Kitchen. Oh. Come on. This looks so bad, dude. Oh my God. Oh, what are these wicks? What are those? What are those? No. 90% liquidation wick? Dude. No. No. I mean, you can't trade this, because you get stopped out every time it has one of these ridiculous 90 or 73% wicks. I mean, so, and you can't invest in it because it's a crypto named after food, so it's obviously trash. I mean, all this thing does is just die. The only thing it's ever done is just melt down. Now, this is a Bitstamp chart. Maybe if we look at a different chart, is there some other chart that looks better that you know of? Or, I mean, is this what you're looking at too? There has to be a better chart than this, right? August 2021? I don't know. Is that when it came out? I don't know, man. It's hard to keep track of all these cryptos. So, but the weekly looks terrible. I mean, the monthly looks terrible. Consistently putting in lower lows. I mean, there's a little something going on here, but there's a little hard buy still in the bearish control zone. Bunch of green histograms, but just continuing to melt down. I mean, dude, there's a million other things better than this that you should be messing with. This is complete trash. Again, maybe there's a better chart and I need to look at it. If you ask me about a crazy crypto that I probably have not done technical analysis on ever, or at least recently, if you know of a chart that's like long term, that has a bunch of history or something like that, or an exchange or whatever, when you list the ticker, put the name of that exchange or that ticker, like what you want to see it compared to. Like in this case, Sushi USD on Bitstamp chart. And that helps me out because I don't have to go look at where this was first listed at and try to look for like positive history. But to tell you the truth, this looks fucking terrible. It looks absolutely horrible. I mean, it's been below the 200 exponential and simple and has not even come close to retesting it for literally months right now. And these liquidation wicks are just ridiculous. I mean, there's a little bit of bullish divergence between here and here. It's trying to build up some momentum. Hard buy, you know, back above the 8 and 21. I mean, it's just not worth it, because you have to decide when you buy into something like this with these massive liquidation wicks. Do I want to just chance it and not have a stop loss and risk this just going to zero, or do I want to like have a stop loss and just assume that I'm just going to get, you know, stopped out regularly, or you know, maybe not regularly, but at any given time. So for me, this is a big no-go. I would just not even mess with this. Now, is it possible that, you know, this was the bottom and now, like, you know, we're just going up from here and we can just follow these fibs and, you know, it's like trading technically? And I mean, maybe. Let's take a look. I mean, it bounced off of the 0 and then bounced off the 236. So, I mean, maybe. I don't know, man. I would not mess with this thing. I would keep my distance from anything that has a chart that looks like this. So, very nice thoughts, said Indian Kitchen. For sure, man. Thank you. 10 out of 10 likes. Good. Thank you, sir. Appreciate everybody liking it up. UniQ says they just announced a Solana phone. Awesome. Cool. So the corrupt crypto project that is completely centralized, that will literally confiscate all of your assets at will, even though you purchase them with your own money, that's supposed to be decentralized, has a phone coming out. Awesome. Cool. Do you think anybody's going to be buying the new Solana phone, or do you think people will stick to like iPhones? I mean, me probably stick to the iPhone. So, but yeah, I mean, you know, that's probably the news that gets people excited. That, you know, hey, we're going to make a phone, so don't worry about what's going on over here, where we're literally like confiscating whales' wallets for the greater good. No, thank you. Indian Kitchen says KDA man on 1 day KuCoin chart. Are you reading live chat? I mean, obviously, yes. Jhoff says he checks between segments. Thank you, Jhoff. Appreciate that. Indian Kitchen says, bro, KDA is nice one. Kadena is nice project. I mean, it's not. It's not a nice project. None of these are nice projects because they don't do anything. I mean, if in order for something to be a nice project, it has to have a working product. And most of these don't have working products. So I don't think you can call them a nice project. You could say they have a nice white paper. You could say they have a great marketing pitch. You could say they're excellent at, you know, selling a dream. But I don't think you should say they're a nice project. UniQ says, KDA looks much worse than the last time Crypto Trend Trader looked at. Yeah, it melted down exactly like we discussed. Definitely called that one. Indian Kitchen says, just bought sushi at 1.2 and sold at 1.33. That's why I was asking. Cool, nothing wrong with that, man. You can scalp whatever you want. I would just be very, very careful with something like that. Indian Kitchen, please look at KDA KuCoin. I think we already did, didn't we? UniQ says, if you buy Solana phone, they send you a spare in case it goes down. Oh, that's so fucked. But that, I actually would believe that. It's probably true. So, yeah. All right, gonna go ahead and wrap it up there, guys. Appreciate everybody tuning in today. Obviously went nice and long again, like always. I think it's just inevitable. 2 hours and 33 minutes. But yeah, go ahead and wrap it up there. Appreciate each and everybody tuning in today. It is Friday, 1:37 p.m. Eastern Standard Time on 6/24/2022. That is it for today. Make sure you check us out for our live stream on Sunday, 8 p.m. Eastern Standard Time, Wednesday, 8 p.m. Eastern Standard Time, and of course, every Friday, such as today, from 11 a.m. till apparently 2 p.m. Eastern Standard Time. Appreciate each and every one of you. Appreciate all the support, all the kind words, and all of the group members, as you guys have made all of this possible. For those who are not group members, who would like to be a group member and show your support, you also get access to the TJD, TDMACD. Oh, wait, no, that one's already free. You get access to all the other like 10 free indicators I have, but you also get the new updated version of the Jewel Thief, which I show on stream every day, and then obviously the Master as well, which is basically my trading strategy coded into an indicator. So if you want to show your support, join the group. You can reach out to me. I obviously would appreciate it, and so would all the people who you know, get any value out of this already for free, as it's all made possible by the support of group members. But that is it for today. Remember, none of this is financial advisor. I'm not your none of this is financial advice. I'm not your financial advisor. Markets are extremely volatile. Please do your own research, trade responsibly. I am Crypto Trend Trader, And I am getting the fuck out of here. Everybody have a great weekend. Peace.